Hello, everyone. Welcome to the 7th Tradier Cboe Options Summit. We're excited. We've got a big day for you today. Lots of great guests. We have a couple great panels. The topic today is the emerging options trader. We're so excited to have this. Thanks to Cboe, as always. We're going to have our keynote speaker come on in just a second. His name is Dan Raju. We're all familiar with him. He doesn't even need an introduction. So he's gonna come out. There's Dan. Just want to make a reminder. Make sure you put your comments in and questions in the space. Be thoughtful, please, and also be respectful. Hello, Dan. How are you? Do I have to introduce you anymore? I don't think I do.
No, I don't think so.
Dan's our CEO at Tradier. He's going to give us a little look at one of the surveys we did, right, Dan? So yeah, so we're excited to see this. We interviewed some folks and did a survey, and Dan's going to give us some results and some comments around that. So I'm going to leave and let you have it. And then when you're done, you know what you have to do afterwards.
I do.
All right. Good luck. Break a leg, Dan. I'll see you in a little bit.
All right. Can you see my screen? Lex, can you see my screen? I'm assuming you do. Hello. Welcome to the Tradier Options Summit in partnership with Cboe. Super excited. Excited for the topic we're talking about today is the emerging options trader. So super excited. We are doing this as a part of a new initiative called the Tradier Hub Initiative. So thank you so much. Thanks for all of you. Thanks for actually participating in the hub. A special thanks to Cboe. One of the stuff that makes our relationship with the Cboe so special is a common bond on making sure that we are providing the best education and the best awareness and letting traders make the best decisions that's good for them. That simple idea of making sure that we are spearheading everything around education is what actually connects us with them. And so we are so happy for them. And we're so happy to be in partnership with them for these events. Over the last couple of months, I wanted to thank all the people who have made the Tradier Hub community such vibrant force in the way we actually work through our days and trade and engage with the markets. So we are trying our best to bring some of the smartest people, the best education, the best platforms, and a vibrant trader community all together into one common location called the hub. So I do want to thank everyone for making the hub such a great success. Today, we're going to do something absolutely special. What we're going to do is we are going to take the summit more to the bottom, where the location where the trading happens. So today we've got some amazing panels. I think Lex is coordinating a panel with some of the smartest innovators who are building great products for the retail investor. At the same time, I think he has put together a panel of some of traders themselves. So we're going to talk to some traders for the first time. I guess we will know exactly what they're thinking, how they're thinking. So super excited about that. Plus, we got some great speakers. We got Jonathan from Cboe who's going to talk about zero DTEs. Can't wait to hear that. And plus, in addition to that, we've got my friend Rob Hoffman, Marcus from Rockwell. We got Sam from Smart Trading 411. So great speakers. We try our best to bring something different and something that's useful for the traders every summit. And like Lex was saying, it's our 7th summit. So super excited about that. One of the stuff that we are noticing that there is a fundamental shift in the way retail trading and retail investors think, the way they act, the way they react, the way they engage, the way they trade, and the way they consume education. All of that seems to be shifting, right? So, and we are seeing that when we, as a part of the hub, have conversations with the educators, with the innovators, and the traders, we see that. We see that continuously occurring every day. So what we did as a part of the Hub initiative is to basically run a survey, right? Wanted to know what's on their minds. How have they evolved, right? I mean, all of us trying to analyze based upon what we hear is different than what we hear from them. So how have they evolved? What asset types are they interested in? What strategies, right? And we couldn't help ourselves but ask them a question about, I guess, the meme stock myths that exist in the market. Education, how do they look at education in 2023? And most importantly is, where is their sentiment as it pertains to the market today? So what we tried to do is we got with hundreds and hundreds of traders who participated in this. We were able to put a small list of observations together, which I think you all are greatly going to enjoy. Let's talk about this, right? One of the first things that we noticed, that most of our traders, and actually the Tradier volumes also seem to represent that, most of our traders, and approximately, as I can say, 35+% of our traders trade more today than when they were than the years before. And what's even more interesting is they're trading more than, and all, what's interesting is 31% of them basically think that they trade more now than during the pandemic, right? So what I think is happening in the market, my observation is, I think the market conditions are adding to some of these volumes, but more importantly than that, the amount of education, the amount of great tools that are being pumped into the market, some great innovation and connectivity are all helping. Great data, great content, great connectivity, great mentorship are all helping actually drive these volumes up in 2023. Now, one of the more fascinating things about this is I'm not surprised about the fact, see, this survey that we are talking about is being done on the Tradier community. Tradier community is largely an active trading community. And so I just want everyone to know that the numbers that you see on this survey today will be more geared towards the active trading community, traders who trade more than 7 to 10 times a month. So that's the kind of trader. So you'll see that, and that's what we are focusing on too in this survey. Like the survey said, it's an active trader survey. One of the stuff that we have also noticed is crypto. Now, what's fascinating is only 4% of our traders think that they're interested in crypto in any way, shape, or form, right? So, the idea that the crypto is based, and it's not surprising considering what's happening in the market and everything that you hear about it. There's completely a lack of interest right now that we're seeing in the active trader community. We see that a little bit in the early stage investors, whom also Tradier serves, but in the active trader community, there's very less, more and more, there's less interest on crypto. I don't think crypto is ever going away. There's always going to be some amount of interest, but it's certainly at a lower number right now. And as usual, as not surprising that you see that, I think futures and futures is exactly where it always was. Forex is hanging around there, but a lot of interest in options. So kind of super excited about the fact that, there is a lot of engagement in the market, more than we ever saw before, right? So it's very interesting. Another interesting thing is, we asked a question to the traders, which was, how do you trade today, right? How much do you, and 81% of the traders said that they do some kind of a technical analysis, right? That means they're using price charts, they're using market statistics, and they're trying to predict what happens in the market enabled by tools, right? So, which is a good sign. It represents for me a graduation in the market. It represents how much adoption of tools basically has occurred in the retail market, and more importantly, that you see it. The number of companies that are launching great innovative retail platforms, purely as software providers, has boomed in the market to a great extent, right? So, and we see that. Obviously, we provide an API that serves that market, so we see that great growth in that market segment. And the traders are also saying that they use a lot of technical analysis tools. Now, one other interesting thing is they use 61% of the traders say they use technical analysis. They trade on fundamentals, right? So what that also tells me is that they are, and it kind of reflects. We'll talk about meme stocks, which is not fundamental trading, but which also reflects that the same idea that people are more what I call as disciplined. Active traders particularly are more disciplined and more organized and more data driven than they ever were. And another interesting number that fascinates all of us, and it could be the symptom of the community of traders that we work with. Around, as you can see, around 40, close to 45% of our traders are basically, involved in swing trading. I guess that they're trying to best use the short-term price movements in the market. So, and the other stuff, people doing scalping, long-term investing. 28% say that they do day trading. So those numbers don't surprise me that much, but the swing trading number kind of surprises me. So which is kind of interesting. But while all this is occurring, if you ask them how much of their portfolio do they actually risk in a trade, the numbers will indicate the fact that as you can see, 36% of the traders say they never actually risk more than 1 to 3%, right? And you can see, and 26.5% of people say that they risk 3 to 5% on a trade. So they don't risk a lot, right? And you understand that the active traders generally have larger accounts. So 3%, 1 to 3%, as much as their larger numbers, they still don't go ahead and risk so much of their portfolio on a single trade. And so this for me represents, and we'll try to track these numbers over the next couple of surveys to see how the market is evolving. But all this for me represents a graduation in maturity in the market. Now, this is a question that I thought was super fascinating. So, as we asked the question, in fact, I spoke to a trader, and the first thing he asked was, is this really even a thing, right? I guess some part we in the market tend to coin terms which mean little or none to actually the traders. But here's an interesting data point. When we ask them a question, is that are you interested in meme stocks, or how much do you engage in meme stocks? You'll be fascinated so that more than 90% of the traders said that they don't care about meme stocks, or they don't engage in meme stocks in an active way, right? Now, this is contrary to the meme stock rallies and conversations that we have seen that's been taking place for a long time. But yeah, I mean, I personally also think these meme stock rallies that we're talking about will taper off, right? There's a graduation effect in the market. People are using more technical and fundamental tools. There's a lot of education in the market. But also, I think the early stage investor has kind of tapered off a little bit. I think the market is more dominated right now, or the bigger chunking of the trading volume is actually coming from more sophisticated traders and educated and more matured graduated traders. So I think the meme stock rallies will basically kind of taper off. I don't think they'll ever go to zero, but I think they will taper off a little bit. But what's fascinating also to know is that more than 53% of the people are not on Reddit, or they don't care much about Reddit, right? Now, nothing against Reddit, but just the interesting observation is a lot of early stage investors seem to be on the Reddit communities, but the advanced active traders, you'll see later on on another question where they engage, but they're not on Reddit, right? So which is, and almost 40% of the people don't even think that they should rely on anything that comes out of Reddit, right? So now the traders could have answered these questions applying Reddit to a broader set of platforms like that, but the specific question we asked them was largely around Reddit. So which by itself is kind of very, very fascinating for us. So yeah, I guess that's a question. A lot of conversation about meme stock rallies, but when you really hit the active trader community, they don't seem to care much about it. So that's interesting. Now, I'm not going to talk about this slide, right? I'm not going to talk about this slide. We've got Jonathan from Cboe, who is basically going to cover an entire segment as to what is driving this amazing interest on zero DTEs, right? Now, what the survey says, and this is the active community, almost 55% of the traders have or are engaged or doing something around DTE. So which is high. And I think Jonathan at some time later today from Cboe has an entire segment. So I'm just not going to I wouldn't be able to do the justice like he would do. So I'm just going to just give you the number and not comment on it. Now, another interesting thing that we had seen a tremendous growth in SPX volume, right? And so, and we wanted to know what traders basically think about it. And as you can see, almost 65% of the traders our traders, that's the community of the hub trader community, seem to be interested in SPX. And I think it kind of explains itself, right? So there's a cash settled nature to it, right? They don't have to worry about early assignments. And so, I mean, they think of it like, I think, a more cleaner way to invest. And I think these volumes will only grow as just connecting with the ways traders think and hearing them all day. So that kind of tells us, I think a few other panelists today are going to talk about SPX. So I'm just going to stay away from it a little bit, but very interesting to know that roughly around, close to almost 65% of our customers basically are trading SPX. So which is fascinating. And this survey was just not sent to Tradier customers, it's sent to the entire active trading community that we have access to as a part of the network of platforms, educators, and brokerage accounts. So that is very interesting. The one other thing that is a question that we had asked was, what is the social media platform that you use, right? I think traders in general, doesn't matter which segment, are more socially active than they ever are, right? There's no question about it. But what came out of this survey was the fact that for active traders, almost 40, close to 40, I guess 42.6, 43% of the traders, Twitter seems to be a more engaging platform. It kind of makes sense because there is this whole following somebody concept in the active trader. They like to follow leaders. They like to follow what I call as, people, great educators. And so that since you have that, follow concept of Twitter, I think it logically sounds like a great place where active traders are. So it's very interesting to know that close to 43% of the traders feel Twitter is the preferred platform for them. Facebook next, Instagram next, Reddit 13. I'm even surprised by that number, to be very honest. TikTok. But what's interesting is the fact that there's an unbundling nature where of smaller communities, almost 29% of the people engaged in smaller communities that are not centralized popular platforms. So which is also an interesting number. Now, one of the questions that we asked them primarily was, hey, what do you basically, where do you get your news from? Like, where do you fundamentally get your actual news from? And so, we have, it kind of serves a lot of thing that we see in the market. When we ask traders where do they get the news from, we always get a very, very unbundled or a distributed answer. So we put a survey. We basically wanted to know where do they get their daily market news from. What is fascinating that you'll know is that almost 50% get their news content from their destinations of choice, right? They go to their own websites, they go to their own what I call as portals. A big chunk of them get their news even today from newsletters. As fascinating as that number is, we plan to introduce a question around newsletters subscriptions in the next survey. So, but almost 50% get their content from what I call as direct websites, which they choose, or a selection or watch list of sites that they fundamentally use. Now, the other part, which is also interesting about this, is the traditional TV news networks. Only 20% of the customers seem to basically go ahead and say that that is their primary source. I think you're always going to have a section of people who love that cable media. But I think more and more, I think people leverage that plus additional sites. Now, YouTube, 18.1%. I mean, I guess it's a news source, so I think I would have thought the number would be larger. But if you put it in the category of a news source, maybe it's not. But I think what is important in that observation is I think there is a conflation of social media. Content creation and news all combined into this into a broader spectrum of them calling it being informed about the market. And so so that pushes people to select their own websites that they use, right? Next time we're going to ask a question as to what websites they use, and that'll be fascinating. One more interesting thing that we had fundamentally seen was almost 60+% of the active traders actually get their trading insights from educators. I know there is a massive education community around the hub. This is an amazing opportunity. There is a retail demand for education more than ever before. I've been in this industry for at this point of time for almost like 15 years. I've never seen this much amount of content being created, educational focus that is being pushed from the traders, and also great educators that are being created in the market. And I think one of the inspirations for launching the Tradier Hub was just that there's so much great what I call as content and creators that are there in the market. But there is a big retail demand for education, and so I just wanted to make sure all the folks who are in the Hub community who do education, this is absolutely great news, right? So next, right, here's an interesting question that I thought that that's very, very that kind of defines how we look at the next 12 months. We asked a question primarily around the fact that, you know, what would you do in the year 2024? And we broke that into a bunch of smaller choices. As we can see, 70% of the active trading community feels that they are going to try to improve their trading skills next year. Once again, for all the folks who are creating platforms, who are creating great education, great content, great opportunity, that there is an actual, retail demand for more for of them trying to improve their trading skills. At the same time, focus on that. As we can see, almost close to 70%, almost 68.7% of the customers said that they'll put more capital to use next year than they're doing this year, which is also interesting. So on one side, I think it tells that there is a level of basically wanting to engage in the market more than they ever did. That's also reflected in the first question that we talked about today. I think diversity of portfolio is important for traders. New markets, I'm certainly surprised by the diversity into new markets. That's important. We need to break that down in the next survey as to what that basically means, right? And I think so. But if you ask the question, how many of them actually think that there is going to be a recession? What's fascinating about the fact that a lot of people actually think that there is going to be a recession. Almost, 46% of the customers actually think that there's going to be a recession, right? So what is fascinating is that while 46% of the folks actually think that the US is going to get into a recession, they also at the same time are saying they're going to put more capital to use, and they'll try to get educated, and they'll be engaged more in the market. So I think that kind of tells me that there is still, I see a disconnect between recession and whether traders have a bullish or a bearish sentiment about the market, which is kind of fascinating. And I think, but we're also talking about an active trader community. So I think their sentiments will represent more of a focus on the ability to engage in the market, much more than all the others. So those are the primary questions. I think what we're going to do after, there are a lot more questions, there's a lot more data. In fact, we published an entire report of what our summary of observations, just not the numbers, but what we think these numbers basically mean. Thanks to basically all the partners who have helped us actually draft some of these observations. We put a lot of time and effort, as you can imagine, asking an active trader to spend 10, 15 minutes of his time, and hundreds of them to basically do that. Took a lot of effort, and to be very honest, maybe a lot of effort on our side to make sure we ask the right questions, but we didn't need to persuade them. I think traders were forthcoming to come and give the observations. So that's what, so after this event, we will try to actually, all the people who attend the event, we'll try to send you a copy of the report. It will also be available on the hub. I think the press release just went out. I think there's a little bit of coverage that's going around about these observations. But once again, we tried to do the best, and I hope you folks enjoyed the numbers. What I also wanted to do, is the fact that I'll make a few comments on what we expect to do over the next couple of summits. Is we will always try to pick the best topics, but we'll also try to so give us your feedback about what other questions you want to ask. We are trying to make these surveys a little bit more repetitive. Super excited about the first one we did. So I hope you folks enjoyed these numbers. I'm sorry if I ran through the numbers a little bit quicker than I should, but there's a lot of numbers. So take a look at the reports and and let us know. And please send us the questions we need to ask. We would love to do it. Our traders would enjoy answering those questions. So thank you so much. So I'm going to pause there. For a second. After this, like I said, we have some great guests that are coming up. So so now what I'm going to do is, if it's okay with everyone, I'd like to bring the next guest onto the show. Kayla, can you bring Rob onto the show? All right, we've got Rob.
Hey, Dan.
How are you doing, bud?
Doing great. Yourself, my friend?
I'm doing good. Locked up in this conference room here in Charlotte, but can't complain.
Yeah.
So,
I'm away in the office here too.
by the way, I had a chance to visit Rob a few weeks ago. Super nice guy. So anyway, for everyone, I'm super excited to actually introduce CEO of Wealth Charts and Wealth 365, Rob Hoffman. One of the most important things, and I get a chance to talk to so many educators, so many platforms, so many traders on an ongoing basis. But one thing that I can say about Rob the day I met him for the first time is he's a good person, right? And that's what he's a good person. He's an evangelist for the traders. He gets up in the morning and he's trying to do everything to save, protect, educate, and work on behalf of the retail trader. So Rob is a trading champion, great educator, like I said, and a great partner of Tradier. So super excited to basically go ahead and introduce Rob. Rob, I think you have anything that you say, I think our community will enjoy it. So I'm going to pass on the mic to you. I tried to do the best justice describing you, and I'm sure you got a lot more background than what I was able to cover in a few sentences.
No, thank you very much, Dan. And can you see the screen up there? Is that showing for you? Wonderful. Great. All right, gang. Well, I know we have a limited amount of time together. So what I'm going to do is a couple things here. Just reminding, trading involves risk, not just reward. It's been a great year on our end here, but always consult a registered financial representative and a risk trading plan before ever going in trading and investing in anything. All right. And then if we talk about something hypothetical, if we have time for some Q&A at the end, just keep in mind those have inherent risks. We don't talk about something we've done like live this morning, for instance. And then, of course, since we're talking about options today, remember there's a great website here, optionsclearing.com, about publications, characteristics, to learn more about those, since I know we have a lot of wonderful new options traders here today as well. So I wanted to share that with you. So the big thing is I've been doing this for a long time, as evidenced by all the gray hair, and the screens I'm broadcasting in front of right now. This is what it looks like. And the topic we're going to talk about today is the inventory retracement bar strategy and reverse inventory retracement bar strategy. Because of our limited time together, hopefully I'll be able to come back and share some more strategies at upcoming events as well for you. But today we'll talk about that one. And I use these strategies in these real money trading competitions around the world. So I go representing the United States in these big international competitions and trade against a lot of wonderful traders all over the world, in these big, highly regulated events where they have all these judges and everybody's standing over you, watching everything that you do, and even trade up against advanced algorithms at times too. So not just man, but machine as well. So I've won about 32 of these real money trading competitions around the world, including 2 earlier this year over in Italy, the top of the top duels and the Champions Cup. So that was pretty exciting. Again, having all of the judges over you verifying all of your trades, and I was able to win this one, the top of the top duel and the Champions Cup. And why that's important is because I really use these strategies. And in 2022, we heard a lot about the markets and the concerns and the plunges and the fears. But even now, in fact, you just heard Dan a few minutes ago referencing the recession, right? And so there's a lot of concerns out there with interest rates, recession, a lot of different things, central bank digital currencies, all sorts of different things that are floating out there right now that are on people's minds going into 2024. And let's not forget the election. So there's going to be a lot of exciting volatility in 2024, great for options traders. So through this last couple of years, we've had, downturns, we've had upturns, we've had sideways and congestion, and it's been a great couple of years. 2022 was my best year in modern memory, and now 2023 is actually my best year in modern memory. It's really been a wonderful couple of year run, despite the downturns, the sideways chop, and then the market upturns. All that process. So I hope you're going to get something out of these strategies that I share with you today. So I'm going to get into the presentation in a moment, but before we do that, everybody has their own reasons for trading. Some people it's money, some people it's family, passing on a skill. I'd love just to quickly know what everybody's reason for trading is here before we get into me sharing the strategies. So I'm going to share with you mine while you type in yours. So this is my wonderful little daughter, Mackenzie, my beautiful bride, Sarah, who Dan has met as well. In fact, most of the Tradier team has met Sarah, of course. She's wonderful. And so Mackenzie and Logan, wicked smart, always he's getting himself into all sorts of things, and he loves lots of dinosaurs. So this is why I go ahead and trade. And so everybody has their own reason, and while you think about what your reason is, just know this is what motivates me, this wonderful family, and then of course my extended student family as well. In fact, many of them came to our wedding. We had tables and tables at our wedding years ago. My 45th birthday party cruise, we had family, like 70-something families of people there for that wonderful cruise. And so whether it's in Europe, whether it's here in the United States, it's so wonderful to go ahead and be with people, and that's what motivates me. Okay. And so, yeah, thanks for sharing your ideas there as well, gang. I appreciate that. So let's get into the strategies. This is recorded, so take notes, but feel free to listen there as well. To what we're sharing. So we're going to first talk about the classic inventory retracement bar strategy of mine. Okay. And so what it is, it's a price-based continuation trade. This is the kind of thing I like to use in trending markets. It can help you identify in non-trending markets key areas of support and resistance. But when do I typically use this? So again, trending, and it can be amplified by fundamental analysis. In fact, I know when Dan was sharing the results of the survey, there were quite a few of you, I think it was like 61% of you that also use fundamental analysis, in addition to well over 80% of you using technical analysis. And so that's really great that you guys go ahead and do that. And by the way, yeah, I see you guys are still posting in your comments. So thank you very much for that. I appreciate that. And so and that's great, Amanda. Thank you. And so as we take a look here, so you can combine the technical analysis and fundamental analysis with the strategy that I'm sharing with you today. So what we're doing now is we're looking back over the last 20 periods. The reason why I say 20 periods, I will use this as a day trading strategy for our wonderful 0-day, DT options traders. This could be used on a short-term intraday basis, or for our more classic traditional swing traders, it can be used on daily charts, weekly charts, and everything in between. So 1 minute right on up through monthlies. I'm focusing on these. And yes, you could use it on yearlies, but I'm most focused on 1 minute through monthlies. So what we're doing is we're looking at over the last 20 periods on the time frame we're looking to trade, and I'm looking for these bars that are 45% or more off their high in an uptrend, or 45% or more off their low in a downtrend. And don't worry, I'm going to show you lots of examples in a few minutes. In fact, the Cboe is going to be highlighted, not just because I'm here. I've been showing the Cboe for weeks and weeks, and you'll see why in just a few minutes. So where's the entry? It's typically 1 tick, 1 cent, 1 pip, above or below the signal bars, which I'm about to identify for you. So really great, because once we break out of that on the underlying instrument, break out or break down below those levels, then we can go ahead and look to execute our favorite options trade and options strategy around that, which we'll talk about in just a few minutes. So where's my exit? Typically, it's a trailing exit. I have a lot of tools, which some I'll briefly share with you inside of wealth charts. But it's primarily a trailing exit or up to a key support or resistance level, of which we have several of those in the market right now. And then where is the stop loss? It can be for when I'm trading non-option related tools, it can often be 1 tick, 1 cent, 1 pip below the low of the bar that I entered on, the signal bar. However, when we're focusing on options, we can broaden that out a little bit more and look more at the daily and the weekly charts for some of those same kind of bars. A couple things to remember, the concept of rocket fuel, which we'll talk about in a moment. If the bars move too far too quickly, maybe it's due for a pause, maybe not the best time to enter. Not to mention, from a premium perspective, you're going to be paying, depending on what kind of trade you're doing, bullish or bearish, you're not going to get good, premium value in that kind of situation. And then it has diverse applications across different types of instruments and timeframes. Of course, today we'll be focusing primarily on options, as you can imagine. Trail the entries to reduce the risk of reversion to the mean. That's what RTM is there. And, basically trade with a trend. All right. So let's go ahead and take a look at the inventory retracement bar. All right. We're going to, first of all, in a downtrend. So what we're looking for, we're in a downtrend, we're looking for bars that are 45% or more off their low in a downtrend. So think about this as, a wick. So I like to use these. You can use them with open, high, low, close bars. I use them with candlesticks just for quicker visual identification. But what you're looking for is bars that are 45% or more off the low. So from high to low, what we're looking for here. Here's the high, here's the low. And so I want this to be 45% or more wick. Here, I want this to be, from the high to the low, 45% or more wick. And you can see this one's about 50%. This one's like 95% wick. So, then this one is about 50% wick here. Now you'll notice this is a little wider red bar. This is a real thin red bar. This is a green bar. That part doesn't matter for the purpose of this strategy. What matters is that you'll go ahead and identify that 45% or more off the low in a downtrend. All right. So now, one thing I want you to note here, if you got a big wide range bar, we talked about that concept of rocket fuel. If the bars have been moving, about this length right here, bar over bar, and then all of a sudden you get a big wide bar that's like 2-3 times wider, and you're getting that IRB, that could potentially be a short-term bottom in the market. So that's why I like to look for that's why I talk about the concept of rocket fuel. If it's moved too far, too fast. And then keep in mind, the entry for this particular trade is going to be 1 tick, 1 cent, 1 pip. So in our case, 1 cent below the low of these areas here, right? Well, now in this case, for this big bar here, that's like 90+% off the low, it's got to come all the way back down here before I even look to enter it. Okay. So that's the kind of trade typically I'm going to look to avoid. Now, in an uptrend, I'm going to be looking for bars that are 45% or more off their high. See what this is institutional inventory, okay? And so one or more institutions now stop the market from going up, but it's actually pulled it back down. Now, what does that do a lot for you and I psychologically? It makes us not want to get into the trade. How many times, how often do you find yourself getting into the market, you're about to get into the market, and then all of a sudden the market starts pulling back from the way you thought it was going to go. So you were thinking, okay, you know what? This is looking pretty good for an uptrend. I'm going to go ahead and take a long, oh, wait, no, it's starting to pull back. Whoa, good thing I didn't take one of those trades. That would have been another one of those losers. Well, so what's happening there is it's psychologically taking you away from the market, only then to go right back up the way you thought it was going to go. In fact, how many of you feel like you miss those trading opportunities occasionally? You're about to get into a trade, it pulls back against the opportunity you were thinking of, and then goes right back your way after you decide not to take the trade. It's like, I knew it was going to do that. Well, that's basically what's happening here. It's a short-term move that strikes fear in you, so you don't take the trade, but then the institutions can get better valuation and then drive it right back up. Okay. So what happens here is I'm looking for that kind of thing where the average retail trader has fear in them and won't take the trade, but then the market's free to go back on board the original direction. Okay. So we're going to talk more about that in just a few minutes on live charts. Before I do, though, I want to introduce you to, as a little bonus here today, the reverse inventory retracement bar. Why is this so important? Because it basically roughly doubles the number of trading opportunities that a person can get, whether it's a 0 DTE type option on an intraday basis, or it's a swing trade on daily or weekly charts. Okay. It'll effectively double the number of trading opportunities. So the whole concept of this, everything I just taught you a minute ago, is identical, except that before we were looking for bars that were 45% or more off their high in an uptrend. Now we're going to be looking for bars that are 45% or more off their low in an uptrend. And then in a downtrend, instead of bars that are 45% or more off their low to get into the trade, we're going to be looking for bars that are 45% or more off their high. Okay. So let's take a look at that before we go over the live charts. So right here now, you'll see this bar is, about 90% off the low in an uptrend. So what this is the psychology behind this now is the market's opening up. All right, the bar is opened up, your daily bar, your weekly bar, your 1 minute, 5-minute bar, whatever bar you're trading off of, depending on what kind of options trade you're putting on. And the market opens up, it immediately goes back the opposite direction Okay. And so you're thinking, because the market's been going up, 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 you're thinking, okay, I'm going to get into this trade. But then it opens up and immediately goes the opposite direction. Okay. And so you're like, whoa, good thing I waited a little bit longer. I didn't get into that trade. So you see it starting to pull back. You're like, oh, gee, that would have been another one of those losers. It's probably going to go down quite a bit now. So you stop looking at it on your daily chart, your weekly chart. You go off to look at other things. And then you come back to it a few days later, only to see that it's actually broken above that high there. And now it's off to the races. You're like, I knew it was going to go up. But you got spooked out because of that pullback against you. Okay. So it's the same concept as the classic IRB, except now instead of it going up and pulling back down, it's opening and just going down right away and then coming back up. All right. So let's go ahead, and then in a downtrend, we're looking for the bars that open up immediately. You're thinking about maybe putting on your favorite bearish side option strategy. That's one of the benefits of options, right? You can go ahead and put on your favorite bearish strategies, so you're sitting there thinking about going short, but all of a sudden the market opens up, starts going up, and you're like, whoa, I don't want to get into that trade. But then, so you go on to look at something else. And then while you're not looking anymore, it goes right back the way you thought it was going to go. So that whole concept of the inventory and reverse inventory retracement bar, it's all about finding those areas where, traditionally retail traders are spooked away from the market in a temporary pullback against the predominant trend, and then the market's free to go back on board the original direction. And that's this particular strategy in a nutshell is going ahead and finding these areas where the retail traders are being incentivized to stay away from the market, and then the market can go back on board without them and they miss it. All right. So with that being said, let's go ahead and actually take a look now at the live charts. Now, what we're looking at here, I'm not going to spend a lot of time on this particular chart, as far as there's a lot of wonderful, powerful tools in here. Some of these are my award-winning champion strategies called the Champion Trend Pack there. We're not going to focus on those today because not everybody here, unfortunately, yet has wealth charts. Many of you do, but not everybody. And so some of these strategies won't be available to everybody today. I would like to say that at a future time, after more of you have wealth charts and after upcoming events that we're going to be hosting, then what we'll do is we'll share some of these powerful tools, because there are some wonderful ways to collect premium. If you're a seller, you pay a much lower premium right before big moves. There's a lot of wonderful things I'd love to share with you. But for today, I'm going to focus on a strategy that no matter who you are, what platform you have, you can use the strategy. It'll be a lot easier to use in wealth charts because wealth charts actually kind of semi-automates this whole process for you. But needless to say, so that's what you're looking at right here is some of the strategies I'll be sharing today, combined with some of the award-winning strategies here. So for the purpose of this, let's go ahead and talk about this. Now, just so you know, the inside of here, what you're looking at, this is the IRB tracker, which kind of tells me any bar that's met the requirements that I was telling you for the IRB or classic or reverse IRB. And then these dots, the green dot represents where it did break above one of those and now is officially a breakout where I can look to enter. The green one, that's a classic IRB breakout. And then the yellow one is where a reverse inventory retracement bar breakout happened. You see right here, for instance, there was. So as soon as it traded above that bar, that's the entry. All right. So it kind of helps identify all of this, for you. All right. Now, let me just for a moment, I'm actually going to hide these, and that way we can just look at the raw chart. Okay. So remember now, if we have an uptrend, I'm going to be looking for things that are 45% or more off their high in the uptrend, or I'm going to be looking for bars that are 45% or more off their low. So let's see this with a plain chart, if you guys can identify some of these now. All right, so we have an uptrend in place. So I'm going to be looking for bars that are 45% or more off their high or off their low. Well, let's see. Right, here's one, here's one, here's one, here's one, here's one, there's one, there's off the low, here's off the high, off the high, off the high, off the low, off the low, off the high. Okay, off the high, off the high, off the high. So you guys see that? See how you can identify them if you're looking for them, regardless of what platform that you have, right? I want to come here. Tradier and the Cboe have come together to put this great program on for you. So I wanted to share that with you so you guys could see that, that you can identify this no matter what you're using, okay? Now, like I said, in wealth charts, we've gone ahead and kind of automated this process to help identify these a little bit more. So for the purpose of our training here, I'm going to put these back on just so we can see them a little faster. Again, now any bar that has this little magenta triangle, that's one of these IRBs, either IRB or reverse IRB. IRB, reverse IRB. These are classic IRBs here. This is reverse IRB. So it's a great quick way to visually identify these and make sure your mind is always thinking about them. All right. And then what we're looking to do, keep in mind now with this type of thing, we're looking to break out 1 tick, 1 cent, 1 pip above that bar where the market went down. And now the market's free to go on board the original direction. Why is this important? Well, especially after you've had these little pullbacks within the trend, this can help you when you identify these type of signals. Now, as soon as we start to break out of that area, in this area, I can still, if I'm looking, and I want to be careful because, we have a broker and the exchange going ahead, the Tradier and Cboe doing this today. So I don't want to endorse, and nor do they endorse any particular option strategy. But let's just go and think about it in terms of, well, if one of the option strategies we know that are available, selling selling the put, right? So I see this entry, and we have this this pullback, and it comes back off the low and starts to break above the high. Well, that's why it generated the yellow dot, because as soon as it started breaking above that high, I can still collect pretty decent premium because of the overall pullback recently here. And then I can go and put my strike down below, and then or at the money, whatever you want to do, and then what the expectation is, once we break above that high, the expectation is that we're looking for a continuation back into that direction of that trend. Okay, so think about it right here. For instance, here is the market's pulling back. We've got a reverse IRB. As soon as we break 1 tick, 1 cent, 1 pip, so 1 cent above the high here for our stock, then I can look to take the underlying options price. I hope that makes sense to you, because while I do have additional ways to find those entries even a little bit earlier with what I call my champion cross and champion trend tools for today, because I want to have a strategy that everybody can focus on. I want to, put that in perspective so that no matter who you are, put on your favorite trending tool, a 20-period exponential moving average, or, much more advanced tool that you may have in your arsenal. And then I want you to, now look for these 45% off the high in an uptrend, 45% or more off the low, in an uptrend. And then we break above this area, and that's where the entries can be taken. Okay, so that's what we're looking for here. And the Cboe, I've been talking about this stock now for weeks and weeks, and you can see why. It's had a lot of wonderful options activity. It's got a lot of these signals firing off time and time and time again. And so let's take a look at this now from a weekly chart perspective. Then we're going to get into zero DTE as well. So from a weekly perspective, same thing. You see a whole bunch of signals firing off. You'll see then it was actually breaking above those levels way back over here. And then it continued to fire off more and more signals and break above them, time and time again. Here's a reverse inventory retracement bar, right? So as soon as it goes 1 cent above that high, like it did over here, it fires off, and over and over and over again. So even on the weekly chart, you can see it. Of course, that's some of your best trades, right? If you got that long-term weekly chart giving you that nice trend, you have a short-term daily pullback within that trend, and then it fires off new signals. I can collect some of the best premium there, and then quickly see benefits from that. So if you're one of the traders that likes to, as soon as you get a quick 50% of your premium collected or something when you're selling an option, you might have that potentially in a few days, right, when it starts to spike back into the direction. Because once that area of distribution is eaten through, a lot of times the market can very quickly whoosh, as I refer to it, back into the direction of the trend. Okay, so And then if you like to trade, on a short-term basis, like we talk about, zero DTE, what's nice here is you'll see the 1 hour charts here firing off the same thing. So this is great. This is the last, several days worth, a couple weeks worth of hourly charts. So you can see over and over and over again how many times it would warn you about an IRB or reverse IRB, just like I taught it to you a few minutes ago. And then, you can, when it breaks above those highs, we can look for an entry. And you'll see over and over the last few weeks, there's been lots and lots of entries. Okay. Lots of entry and re-entry opportunities there. So this is why this opportunity is so important. When you identify these areas where the market's trending, you can use this for zero DTEs, right? So if you're seeing the hourlies fire off like this, you can bring it down. This is the QQQ. Now this is the SPY. Here too. Dan was talking about SPX and its increased activity. So just looking at the SPY here for a moment too, you see the signals firing off in advance, and then it starts to break above. And so it's those ones with the dots are actually breaking above the highs of the previous bars, both classic and reverse inventory retracement bars. And so I know I'm covering this kind of fast today because unfortunately we only have this 30 minutes together, but this is a very powerful strategy, whether you're a more classic swing trader or you're taking advantage of the power of the zero DTEs. And so over and over again, you can see whether it's SPY, QQQ, same thing, whether we look at it on a 5-minute chart, same concept. So you come into the day and you see your hourly charts, your daily charts are firing off, buy side activity. Then you come down to a 5-minute chart. It's the same exact concept here. And you can see over and over, like here's 45% or more off the low in an uptrend. Let me do it with just, these signals right here instead of all the other great ones, that we're not going to talk about today. So right here, the 45% or more off the low in an uptrend. Well, then we break 1 tick, 1 cent, 1 pip above the high. All right, well, then I'm going to be looking for my favorite long side strategy. Okay. And, same thing over here. They got the classic IRBs, reverse IRBs. Again, they can all be automatically identified depending, what software you have. If you have like wealth charts, for instance. And then, as we talk about with options as a whole, so we take a look here. So like this is inside of wealth charts has unusual options activity. And so you can identify these trades, automatically with like which one's got unusual options activity, all sorts of different types of things you can scan for and strategize for there. And then you can pull up your favorite charts. Like here's is CMG, which, I have this right there, and you can see this firing off. And it's been firing off now for a couple weeks here, over and over and over again. We see those IRBs firing off over and over, and then we're breaking above those IRBs, and it continues to have unusual options activity, right? So a lot of great tools and a lot of great strategies there, kind of summarizing where where this puts us. Keep on schedule as a courtesy to all of our traders. These are award-winning strategies I've used in these real money trading competitions around the world. And representing our country to go ahead, in the United States, to go ahead and hopefully win awards. Like I've won 32 of them, trading them against algorithmic programs. And so I'm very excited to be able to share this with you today, courtesy of Tradier and the Cboe, because this means something to me, right? This is what I do in these downtrends, these uptrends. If we were to break down the last downtrend and then the uptrend, you'll find lots of those IRBs and reverse IRBs even on these daily charts of the stock indices. And it's really helped me have an incredible equity curve here, not just in 2022, but even 2023 is even better. My best year in modern history. So I hope that this teaches you guys something to think about. I do it for my family. I do it for my extended student family, people hopefully that are listening just like you today. And so I hope you take away something from this. wealth charts that I've been featuring for you today. We've won best swing trading platform, best day trading platform, overall trading platform in 2022 and 2023. 2021, we have a swing trading platform. And now I'm proud to announce literally 2 days ago, I was in New York accepting this award for best swing trading platform again, and the Global FinTech Awards. So I'm really excited to have, this opportunity to share these strategies inside this wonderful platform. And if you go to wealth365.com/wealth charts, wealth365.com/wealth charts, what you can do is you can see more of me so I can teach these strategies over hours of time. There's a big upcoming financial show there in January, and I'll be doing several days worth of training during that big event. There's like 60 speakers speaking over the course of the 6 days, but I'll be coming in multiple times along with Tradier, possibly the Cboe, and other entities there, and I'll be teaching both during the day, and I'll be doing nighttime classes there as well. So I could take this little class that we just did and kind of break it out for you and expand it into a much bigger, segment for you. So if you go, to that, again, wealth365.com/wealth charts, that will take you to this page right here. You just sign up there. It's free. It's free to attend, and you guys can learn lots more. We'll expand upon the strategy I just shared with you and so much more. So I want to keep us, on time today. I know Marcus is coming up here in a few moments, which will be wonderful for you guys to see. And I really hope that this makes a difference and you guys start to look for these things. So 45% off the high in an uptrend, 45% off the low in an uptrend, and then the exact opposite in a downtrend, 45% off the high and 45% off the low for trend continuations as well. Okay. It's all about identifying where the institutions are temporarily stopping the momentum, where you might not be interested in getting in a trade anymore, and then look for the reentry once it gets beyond that. Okay. So without further ado, I'll turn it back over to the staff. I hope you guys enjoyed that, and I hope you'll see me more at upcoming events. Thanks, everybody.
Thanks, Rob. Awesome. How are you?
I'm doing great, Lex. Great to see you, my friend.
You too. Always a pleasure to see you. What a great presentation. That's super interesting. And yeah, I got to tell you, Rob is quite the trader. That's a heck of a record. 32 wins, right?
Yeah, it's out of 36 or 37 that I've ever done. And most of the other ones I placed second place, but no trophy for second place, as I say.
That's right. That's right. No, that's great stuff. So let's do a couple questions. I know we're tight on time, so we're only going to get to a couple of them. So we have some from the hub that I have here. So one of the questions is your favorite candle duration. I guess they mean 1 minute versus 5 minute versus 15 day. Is there a favorite, or is there a combination of all of those?
Yeah, it's a great question. This is a very fractal strategy, and my strategies in general are very fractal. So if I'm day trading, I'm typically looking at 1 minute, 5 minute charts, comparing them against the hourly chart, though. I want to see on an intraday trading, I really like to trade with the hourly trend in particular. If I can get the daily and the hourly, that's even better. But the 1 minute, the 5 minute, I'll compare those against like the hourly trend. I like to be a trend trader, even if I'm trading intraday. So I want to trade with that hourly chart, and then look for a pullback and a resumption back into that 1 minute, 5 minute with like that IRB strategy. Obviously, that's one of many of my strategies, but same concept there. Yeah.
Got it. Good. Okay. Here's one from the crowd. I'm going to put it up on the screen. It's from the Colonel. Do you backtest your strategies?
Yes, so you can backtest the strategies so that you can go ahead and I certainly backtest them with real money. You recall just a minute ago, Colonel, you saw 2023 is my best year in modern memory. So I'm not just backtesting with theoretical money. I'm trading in the here and now with real money. For me, there's no substitute for live. You can, with backtesting, you can kind of make things look kind of good. But in the real world, how do you actually trade them psychologically, right? So I trade them with real money. But yes, you can backtest something like that, of course, as well, and find the markets and the timeframes that work best for you, Colonel.
Perfect. Yes. Good. Here's another one. Which works better, selling or buying options using this strategy?
Okay, well, so I just, because this is a Tradier and Cboe event, I want to be very careful not to endorse any strategy, but I mean, from my perspective, I personally like to sell options. So I'm personally, for me, not speaking on behalf of the brokerage, Tradier or Cboe, I personally like selling options. So I'm going to go ahead and tell you that, I like selling with them.
Okay, good
But
enough.
you can very much use them, as I just mentioned. What I would do if I'm looking to buy, and I'm really going to want a lot of movement. I'm going to spend more time focusing. If I'm going to buy the option, I want to make sure the higher time frame is even more in my favor. I know we're running short, so I won't pull my screen back up. But remember how I had the weekly chart of Cboe, and then the daily chart was also in a short-term pullback. I would wait for it to get that short-term pullback in the daily chart against the hourly, so that I'm more likely to get a bigger snap for it to go farther, faster, to benefit my buy side, buying a call versus selling the put. It's just got to not go back down below my point, right? So it's a little bit easier to just go up a little bit and just sit there till expiration, to win on selling the option. So does that make sense? So
yeah, it makes sense. Yep. Okay. Great, Rob. Thank you for that. Let's grab two more quick ones if that's okay.
Sure, as well as it's okay for Marcus. I don't want to.
We'll let Marcus get his time. We'll
okay, great.
So what, just off the top of your head, what percent of your trades are option trades versus stock trades versus future trades? And if you don't know, if it's too hard to tell,
I'd have to go back into my portfolio. I like to be accurate when we talk about numbers.
Sure. So, do you have a thumbnail?
I love to, all things. And what I'll say, what I didn't even get to show, if I just pull it up on the screen, just give me it's okay with you. I'll give a little sneak peek there. We have a beautiful options platform that's coming to Wealth Charts. We're about to release with all the advanced analytics. So, take your favorite platform, a Thinkorswim, a Tasty Trade, whatever it may be. We have all those wonderful analytics because of my love and passion for options as well. So there you have it, gang, a little sneak peek for you. So, love to go ahead and do all of those, different types of strategies. But
all right, one more for you.
Sure.
You ready?
I'm ready.
Have you thought about automating your trading strategy? So someone asked that, big topic nowadays, right? So
yes,
what are your thoughts around that real quick?
Yeah, so we have the capability to automate things. The reality is I'm one of those weird guys that that likes to go ahead. I don't even mind. I love automation. Wealth Charts has a lot of artificial generative intelligence in it. So I love automation. I'm still the guy. I don't mind the plane being flown by flight computers. I still want a pilot there to go ahead and execute that trade. That's just me. Some people just want to let the computer do it. They want to take the emotion out. I've mastered my emotions, the fear and greed. Not that I'm not susceptible to it, but I'm very focused on avoiding that. And so I'm still that pilot, I just have that feel. I have a feel. Sometimes, the instrument says this, but it's like, I just feel something from my years of experience. So I still like to have a pilot over there. That being said, many of the strategies, certainly a strategy like the one I just showed you, can be automated. Absolutely. Okay. Does that help, Lex?
That absolutely does. Thank you, Rob. I appreciate that. Okay. Well, thanks for coming on. We're going to move on. That was an awesome presentation. We'll catch up later.
Thanks, everybody. Great to see everybody. Thanks for being here with us.
Okay. Thank you. Hi, everyone. Let's move along. So Marcus Heitketter is next. I might have not said that name right, but he's going to correct me. Marcus is a great friend and former IBM director. Hi, Marcus.
Hey, what's going on, Lex?
How are you?
Doing great. It's
just
my
going into your intro, but I'm going to let you give your intro. How's that sound?
What's there to say? I've been trading for a long time. And I'm just here to share what I do. Hope that it helps everybody. I've been sharing this in the past. I know, Lex, that you have been at some of our events. It's always great to have you there.
Thank you.
And
good.
What else is there to say? I'm just a guy trading along and showing you what I do.
Okay, good. Well, I'm going to let you get to it. And then we'll have a little round of questions at the end, if that's okay.
Sounds good.
Do you have to share a screen right away, or how do you want to do that?
Yeah, let's do this. Let's share the screen. Why not?
Okay. Let's see if we can put that in. There we go. Okay, I'm going to disappear for a little while, and I'll come back in toward the end.
Do that. All right. Cool. All right, fantastic. So welcome, everybody. And I just here to share what I do. And I love selling options. Rob just talked about it. Many professional traders like to sell options because this is where I believe we have an edge. And when selling options, what I like to do is to trade something that you might know under the name the wheel strategy. I've written a book about this. The wheel strategy has been around forever and a day. It's nothing that I invented. I'm not that smart. I just put a very specific spin on it, the way how it connects with me, the way how I like to trade. And I want to share this here with you. So I want to show you exactly what I'm doing. If you have some time towards the end, I'll show you some recent trades that I did. But I actually want to spend most of my time here looking for trades right now as the markets are open. So let me just give you a super brief overview about the wheel strategy in a nutshell. So there's actually only 3 steps to it. And the first step is that you are selling put options and you're collecting premium here. So that is the idea. Number 2, when you're selling put options and a stock moves below your strike price, you might get assigned. If you are assigned, it means that you now have to buy shares. And when you buy shares, when you have shares, you're following basically one of the oldest strategies in the book, the one that everybody who gets started with options typically does, and that is that you are selling covered calls. So as you can see, it's a fairly easy strategy. So I want to walk you through these 3 steps, and I want to show you exactly what I do on a daily basis to trade these crazy markets that we have these days. So first of all, let me just show you my trading plan, because I believe it is important that you know, how do I pick the stocks? There's what, more than 12,000 stocks. There's thousands of stocks that have options. Now, first of all, for me, it is important that I only trade stocks that have weekly options. I love trading weekly options, because if you're selling options and you're collecting premium, it's kind of like getting a weekly paycheck. So, but let's actually zoom in and talk a little bit more about the type of stocks that I look for. So first of all, I want to make sure that they are profitable. And I'll show you in a moment what I mean by this. Now, I'm looking at the years, and I'm looking at the last 5 years. And I want to make sure that preferably they have profitable quarters, but profitable years are okay. 2021 and 2020 are an exception. As you know, that is the COVID time, the coronavirus. Lots of companies struggled during this time, so I'll let it slide. Now, I like to trade companies that are paying a dividend, and I'm not really a dividend player. The reason why I like to trade companies that do pay a dividend is mainly because they are no longer growth companies, right? They have their act together. That's why they are paying a dividend back to their shareholders. Now, I like to see companies that have a PE ratio of less than 50. By the way, I just noticed, it's so interesting, right? I mean, Dan mentioned it earlier in his introduction, where he said, okay, most traders are using technical analysis. However, there's also some fundamental analysis. And I just realized, oh my gosh, that's me. I'm using kind of both, right? So just in the broad scope, make sure that I'm only finding stocks that meet certain fundamental criteria. And then I'm using technical analysis to fine tune my entry points here. So I also like to have a market cap of 5 billion or more. It's okay to adjust to 2 billion until we make new all-time highs, right? I mean, recently, as you know, the S&P went into a correction again, and then boom, snapped right out of this. Kind of crazy. Anyhow, and then I like to trade a strike price that must be a support according to the lowest low indicator. So let me just show you a few examples that make it a little bit easier here. So right now, markets are open, markets are moving, and on my scanner, I see one of the companies that is popping up, which is TJX companies. So first of all, this is where I told you my criteria here, and let's just go there to annual. So I said I want to make sure that they are a profitable company. So here we see the revenue of the company, and here we see the profits of the company. So blue bar, revenue, as you can see, green, the net income, aka also known as the profit. So as we can see, TJ Maxx here doing pretty well. Even in 2021, super hard to see, but you see this really nice green sliver. So even though most companies were struggling in 2021, the COVID year, they did fairly well and they came out swinging. So if we are a little bit ignoring the Corona COVID year, we see a nice trajectory here in terms of, well, was supposed to look like this. A nice trajectory here in terms of the revenue. The profits are keeping up. So that for me looks like a solid company. Going through the other most important fundamentals for me, they do pay a dividend yield. It's a fairly small dividend yield, but that doesn't matter to me because as long as they're paying a dividend, we are okay. The PE ratio is at 26.73, which is a little bit lower than the 50 that I specify. Probably just in line right now with the S&P 500. I think the PE ratio of the companies in the S&P 500 is anywhere between 22 and 26, something like this. And a market cap of 104 billion. So for me, this is a good company because when trading the wheel strategy and selling puts and collecting premium, there's two super important questions that you need to ask yourself. First, are you comfortable owning the stock? Because as you have seen in step number 2, it might happen that you are getting assigned. And when you're getting assigned, you are the proud owner of the shares. If you don't want to be proud owner of shares and if you don't want to own the company, that is okay. But then you're not trading the wheel strategy, right? Because you have to own the shares in order to sell covered calls and collect more premium. Now, the second question you need to ask, is it okay for you to own this company at the strike price that you're considering selling puts on? So let's take a look at this example right now. And as you can see right now on my scanner, it is suggesting the 88 put. Why the 88 put? Well, this is where we go back a little bit to my trading plan. And this is when we talk about when to enter. And I like to sell puts and calls when I get at least 30% annualized ROI. And also, I like to have a really, really short fuse here. So on Monday and Tuesday, I like to sell this week's expiration. On Wednesday, this week's and next week's. Today's Wednesday, so I'm looking at both expiration of Friday and the following Friday. And then on Thursdays and Fridays, I like to look to next week's expiration. So right now, as you can see, what pops up for me, for my criteria, and again, every trader is different. You trade however you want to trade. I'm just sharing what I like to do. So we are zooming in here a little bit, and we see that I could sell the 88 put that is expiring this week on November 17th, and I would get 38% annualized. So the premium that I'm collecting is 28 cents or $28 per contract. Depending on your account size, you would obviously trade different sizes. We can actually take a look. So how many shares would I, or how many contracts would I trade? I'm adding this to my calculator where I'm getting the numbers that I'm looking for, right? So I have the stock price, I have the expiration, which gives me 2 days to expiration. I have the strike price, the premium. I would trade based on my account size, 23 options. So this is $644 for 2 days. That's not too bad. So if you analyze it, that gives you 38% annualized. All right. So, but let's go back to the chart and let's talk about this. So here, if we would sell the 88 put, as you can see right here, on Friday at the close, two things can happen, right? The first thing is that we are staying above the current strike price. If so, I just keep the, what was it, $644 in premium and nothing happens. However, if on Friday we are closing below, then I have to buy shares of TJX for $88. And I have to buy 100 shares for each contract that I'm trading. So in my example, I think it was 28 contracts. I would have to buy 2,800 shares. So when you do the position sizing, make sure that you have enough money in your account, because this is why these things are called CSP, which stands for cash secured puts. So you're not selling naked puts. You're making sure that you have enough money in your account that you can actually buy the shares in case you're getting assigned. So the cool thing about this strategy is that no matter what happens, right? I mean, if we go higher, you keep the premium. If we move lower, you keep the premium. If we just move sideways a little bit, you keep the premium. If we move down a little bit from currently $89.24 to $88, you keep the premium. So long story short, whatever you do, whatever the markets are doing, you're keeping the premium, which I think is pretty cool, right? So would I take the trade? This is the next question. So first of all, the question that I would ask myself is, do I want to own the stock? And for me, that is a yes, based on my criteria. And again, everybody is different. Your criteria might be completely different, which is fine. Number two, do I want to own it at the strike price of 88? Well, this is where I like to go back and zoom out a little bit, see what TJX has been doing over the past few years. And if you look back here, and I'm going to zoom out a little bit, doing it on my iPad, so I'm using my fingers, and I have pretty fat fingers, so it's not very gracious when I'm zooming out here. But is that okay that we're using an iPad here, and I'm not just giving you a bunch of slides that we are working on the charts directly? If that is okay with you, do me a favor and just type it in the comments, because otherwise, I promise for next time I will have slides. But I thought this would be easier to also see what's happening in the markets here. So if there's a chance for you to take or leave a comment, please do so. Would appreciate it. All right. So as we can see, TJX in 2019 trading around 45, going all the way up to 60. Then during the pandemic, crashing to 32. Coming out of the pandemic, trading in a range between 64 and 76. Moving higher, and right now being up there. So that is not my favorite stock where I say I want to own it at $88. For me, that price would be a little bit too high. So you might be wondering, what exactly am I looking for? Well, this where let's see if we find a stock where I can show you more what I'm looking for. A little bit earlier, right before I came on live, GSK came actually on here as a potential stock. So GSK, let's talk about this. Again, looking quickly through our criteria here, right? So first of all, are they profitable? Yeah, they are nicely profitable. Over the past few years, even the pandemic didn't phase them. Dividend yield of 4%, low PE ratio of 9.5, above $5 billion. So that is okay. Now, again, combining a little bit of fundamental analysis with technical analysis. So if you're looking at GSK, first of all, what are they, right? So we can zoom in, take a look at it and say, all right, so they are in the healthcare section. So they treat disease in the United Kingdom, the United States, and internationally. Okay, so we get a better idea from them. If we just zoom in here for a moment, we see that they are healthcare and drug manufacturers. Okay, cool. So now looking back, let me just zoom out a little bit. Over the last 5 years, what do we see? What do we learn about this stock? Well, they have been basically trading most of the time, as you can see here, in a range between 32 and 46. Again, few outliers right here, right here, right here, right here, but they've been mainly trading sideways, right? And if we zoom in a little bit more recently, we see that recently, over the past, I want to say, year or so, they have been basically trading in a very narrow range between, I want to say, 34 and 38, right? So this chicken scratch here is supposed to be an 8. Let me make this a little bit better. So if you're seeing that a stock is moving sideways, and really, I want to be absolutely honest. So here's my dirty secret. I really just draw boxes. That's my technical analysis. How do you like my technical analysis? Not that difficult, right? I mean, I know all of the indicators, and I found that drawing boxes is actually pretty good. So if you see a stock that over the past year, look at this, since December 2022, has been trading sideways between 34 and 38, 34 and 38. Bang, 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 bang. Let me ask you this. Where would you want to buy this stock? Just asking. I don't know about you, right? But for me, this would be a stock that I would be happy owning at 34, right? So a little bit earlier, right before we came on to the show here, the 34 strike has been available. Right now, we see that the 34.50 is available, so we can add this to our calculator to get a better idea and see, okay, cool. So we have it available with the stock price right now for next week. So we have 9 days to expiration. Today is Wednesday. I'm looking for this week and next week. We would get $35 per contract traded. Based on my account size, I would trade 58 contracts, collecting $2,000 in premium, no matter what this stock does. And now, if by next Friday, GSK is, let me just zoom out a little bit, staying above 38.50, or actually we had the 34. Let me just use this as an example, because right before we came on, we had the 34. So again, what are our options here? It stays above 34. I'm keeping the $2,040. It goes below 34. I'm keeping the $2,040. And now I own shares and I bought it at $34. So you're basically getting paid to buy stocks at a discount. I kind of like that, right? So, and then of course you can either sell calls right away against your strike price, or you can wait until it moves higher, benefit a little bit from the stock move up, and this way you are even making some money on the stock. So this is what I like about the wheel strategy. It's kind of cool because you are actually making money trading options, mainly by being an option seller. And then if you buy a stock and it goes up, you are actually making money on the stock, which can be actually pretty cool. So this is what I do, and I really like this strategy because it's super consistent. And you see, for me at this point, I don't know if Lex heard me earlier. So today is actually my birthday, and I turned today 54 years old. And at this point in my trading career, because I've been doing it a long, long time, for me, it's no longer about the windfall profits. And I mean, Dan has shared it in his introduction where he said, okay, most people are not interested in meme stocks. I'm not interested in meme stocks. What I'm looking for these days is SRC profits. And the S stands for systematic. And as you can see, I do have a system here. R stands for repeatable. Can I do this every single day? And I can. That's what I do, right? I mean, I'm sitting in front of the computer for 15 minutes every day. Well, that's a lie. Not every day, but I only spend like 15 minutes because it doesn't take much more time. And the other thing is, can I make consistent profits, right? That's what I'm really looking for. So these are my criteria. And if you came here and being super excited of learning how to make 600% with options, sorry, I'm not your guy because I'm getting too old for this, right? To chase these windfall profits and to the moon, right? So this is what I'm looking for because I trade a larger account size. And when you're trading a larger account size, it's important that you can control the risk and generate these systematic, repeatable, and consistent profits. All right. So this is it in a nutshell. And I believe that there's probably a few questions around this. So I don't know, Lex, do you want me to just keep going, or do you want me to take a few questions? How are we doing here on time?
I think we're doing pretty well. I mean, you could run another 5 minutes if you if you can, or we can start with questions, whatever you prefer.
Okay, cool. Yeah, if I have another 5 minutes, let's just continue here with my trading plan. And again, you see, I like to write down my trading plan, and it's not super complicated because again, in my trading career, I tried to make things more complicated, and I realized, oh my gosh, I can't deal with this, right? So the more complicated I make it, the more mistakes I make. You might have even seen it. I don't even use candlesticks here. I just use simple bars. Why do I use simple bars? Because all I need to do is draw rectangles. It's really that stupid simple. And again, this is where some of you might say, well, this must be more complicated, and we must use a RSI and or any sort of indicators. There must be a magic indicators. Well, maybe there is, maybe there isn't. I haven't found it. If I find it, I'll let you know. If you find it, do me a favor and let me know. Would really appreciate it. Okay, so back to the plan. So we talked about what stocks I want, and sometimes just in life in general, it's good to also say, what don't you want, right? And this is where I say, okay, I only want to have stocks with weekly options. The earnings must be after the expiration date of the option. For example, today, Target reported earnings. Would I have traded options yesterday on Target? No, right? Because earnings are a wild game. Target jumped up 17% today. So, yay, you could have been right, but they could have also dropped 10%, right? So, I don't like to do this. Now, I also like to be diversified. I like to have up to 5 positions in my account, and I want to make sure that they are not highly correlated. So, I have a correlation analysis tool, and I'll show it really, really quick to you here. So this is my analysis tool, and I want to show you right now. I'm just adding all of my portfolio in here, and you'll see that most of them actually do have a correlation of 0.65 or lower. The only one right now is IWM and PNC are fairly highly correlated. And I mean, no surprise. PNC is a regional bank. IWM is the index here. So that is where I'm okay with this. But again, this is where, according to my rules here, I want to make sure that I'm not very highly correlated so that it has a 0.65 correlation or lower. No leverage ETFs. I do not like to trade ETFs like TQQQ, SQQQ. The premium is fantastic, but you can get burned here really, really quickly. No biotech stocks. That's not for me because this one-trick ponies, right? If they do get a permit or I don't know, approval, FDA approval, BPIA, and if not, then they're crashing down. I don't like to trade Chinese stocks. Only in China, the CEO of a company can disappear for quite a while, and nobody knows where the CEO is. So I don't like to do this, and I also don't like to trade crazy stocks, aka the meme stocks here. So we already talked about it, when to enter, right? Selling puts and calls. And then I have certain rules for selling calls and also for rolling here. So first of all, for selling calls, I like to sell calls at the assigned price or above, but I might need to make sure that I make at least 30% annualized. I do not like to sell it below the assigned price. Anyhow, sell calls at the assigned price if the annualized RI is between 30 and 150% above. If it is there, you get the idea. It's really super simple. If I can close a put or call and make 80% of the max profits within 24 hours or one trading day, I'll take it. I mean, if the money says, hey, Marcus, I would like to give you some money. I mean, here's what you do. Here's what I do. I say, thank you, and I'll take it. Right? Don't get overly greedy here. I also like to close it at 90% of the max profits until the day before expiration, which would be Friday. And I close on expiration day if I need the buying power or if I don't want to get assigned, which is typically not the case. I love getting assigned because then I can sell calls. And I don't know what I clicked on here. I clicked on something that in the background, this came on. All right. So Lex, how are we doing? Do you guys have any questions for me? If so, do me a favor and type them in right now in the chat because we have probably another 5-ish minutes, 7 minutes or something like this where we can absolutely run through some questions.
Yeah, so there's one here, Marcus. You might have answered this. I'll put it up there. I think you answered that question, but I'll put it up anyhow.
You know what? I actually, it's a great question. I don't look at delta when writing options. I really just more look like the annualized RI, right? So I want to make sure that on an annual basis, I get my at least 30%. That's what I'm looking for, not necessarily the delta. We're displaying the delta. Often I want to say that I'm at a delta of maybe 0.6 to 0.7, but I'm not looking. That is not one of my criteria, but it's a great question. I mean, this is definitely one of the things that you could look at.
Okay.
Like, again, I like to keep it simple. And all of these option Greeks, they're freaking me out. they remind me of Latin in school. I took Latin. I went to school in Germany. I took Latin and I failed the class. Miserable. I mean, not with an D, not with an E, with an F. It was that bad. So that's probably why I don't like the Greeks.
Okay, here's another, a little bit longer statement here, but see if you can grab that one.
Oh, yeah. Amanda, this is a great question. Amanda says, I'm still a very green trader. It's my understanding that stocks have to be owned in order to sell the options. That is true when you want to sell calls, right? So that's the concept of covered calls. Let's say that you have 100 shares of Apple. You can sell a call against it. That's a covered call. Here's the cool thing, Amanda. If you like that idea, you're going to love the wheel strategy. And here's why. You're just adding one step before, and you're already collecting premium before you buy the stocks. However, we talked about cash secured puts, right? So that's what I like to do. So here, in order to write covered calls, you should have the stocks, then you can write this. In order to write puts or sell puts, you should have enough cash in your account that you can buy the share if you're getting assigned, right? So that's for me what I like to do versus selling naked calls and puts. And yeah, I think that's a great question.
Right.
Thanks for bringing it up.
Okay, let me give you another one, Marcus. Here we go. Happy birthday wishes as well.
Thanks, man.
Can you see that one?
Yeah. So have you ever been assigned and had the stock drop a lot? Absolutely. You want to see one of those? Can we share my screen for a moment?
Go ahead.
So here we go. NVIDIA. Have you heard about this stock? This little stock? I got assigned actually at 220 right here. Before it dropped to what? 110? Something like this. That was 50% drop. So there's different ways how you can trade it, right? I mean, you could just cut the stock loose. When I trade quality stocks, typically what's happening is that eventually they come back, right? And I also at some point like to fly a rescue mission. We don't have time for this, but the idea is that I'm buying more of the stock to reduce my cost basis. And that's what I did with NVIDIA. And then I got out of NVIDIA. And yes, there are several of these stocks that I had just recently a trade here. Goldman Sachs, recently a trade. I just did this. Let's zoom in a little bit that you see it. I just did this last week. So I got Goldman Sachs at 302. Yeah, and as you can see, it plummeted all the way down to what, around 290, but then came right back. So yeah, these things happen. These things happen.
Okay. Great. And then let's see what I got here. Someone wants to see the criteria list again. Can we show that real quick?
Oh yeah, sure.
Okay.
So if you can,
let's see what we got here. Okay, there it is.
Yeah. Is this the list that you're referring to?
I believe so. Yeah.
There you go. All right. That's my criteria. Everybody is different. You just need to make sure, number one, what are your criteria for owning a stock? Number two, what are your criteria for the strike price? You see, I have a friend, for example, he trades the wealth strategy and says, you know what, I'm just following Warren Buffett. So I scratch all this. I'm just looking at the list of stocks that Warren Buffett owns, which is Apple, which is Coca-Cola, which is CVX, which is Oxy. I mean, just this morning, I saw the updated list. I don't have it memorized, but there's probably 12 stocks on the list. And he says, hey, I just follow Warren Buffett. He probably knows a thing or two. So instead of me doing all of this analysis, I'll let this guy do the analysis. That's absolutely fine, right? So you can reduce your list, your criteria list here, and say, hey, I just trade stocks that Buffett trades. Keep it easy, keep it simple.
Right. Okay. Couple more, and then we'll move along here. So what about low implied volatility environments? You're obviously selling premium. Do you is that kind of mesh into the 30% ROI rule? Anything else that you may think about in low implied volatility spots?
Yeah, and you see, this is where it's more fun when the VIX is above 30 than where it is right now. I mean, if you're looking at the VIX here, the volatility index, right? We see that it's lots of fun. I'm just zooming out a little bit when we see levels like this above 24, right? I mean, so this is great. This is not bad, but it definitely, I feel it. You see here, for example, June, July, that's when I actually didn't collect as much premium. Let me just show you the correlation. Just, you see this here, June, July. I want to show you my realized profits here for the year. And again, I'm not making any income claims. I'm not saying that you're getting these profits or anything like this, but here for this year, Let me see if I can zoom in or out so that we see it. No, because I want to show you the monthly. There we go. So, okay. So here's, for example, where you see my monthly P&L, and you see June and July when we have lower volatility, right? I mean, it's definitely affecting my profitability. August and September, higher volatility, right? So let's go back here and let's take a look at the VIX, right? So where we have, I'm going to zoom out a little bit so that we see, okay, how are we doing here? September, October, kind of like this. Well, there's not, here is October, right? So we have more of a higher volatility environment. That's where I definitely make more money.
Okay.
Because you can collect more premium. Right?
Sure. Makes sense. Makes sense. I love it. Last question. How about that, Marcus? So what do you think, since you have the potential to take delivery of the stock, right?
Yeah.
How much money do you think you need to have in order to do this strategy effectively? Is there a the smaller number that works for this?
You see, that's a great question. So let's talk about it. So you have to buy at least 100 shares per option. So let's say that you're going with a lower price stock, and let's say the lower price stock is $30. So $30 times 100 means $3,000, right? So you need to have $3,000. Therefore, I believe a great minimum that you should have is around $10,000, because then you can be in 3 positions, right? And this would be 3 times 3,000. So that's 9,000. That's good. Here for this strategy, more is better. The more money, the better it is. Seriously, because then you can trade higher price stocks. But it's a great question. But if you have less than 10,000, I do not recommend doing this. I believe, Lex, that also Tradier has this minimum requirement of $10,000 before you can sell options. Is that correct? I think might be 5,000, might be 10,000. I mean, as a broker, you have some responsibility, and this is where a Tradier says, hey, listen, there's a certain minimum that you need to have in your account. Not sure, just call them. They're really great folks.
Perfect. Okay, Marcus, that's awesome. Thank you so much, as always. Always great to have you.
All right.
Really great stuff. So thanks so much. All right. So our next adventure is the panel number 1. This is a day in the life of an active trader. So we've never done this before, but we have some real life active traders. So these aren't actors. They're not partners of ours necessarily. These are actual retail trading folks who may or may not do this for a living. We're going to find out. So we're going to ask some questions of the active trader group and try to get down to the bottom of what these people look at and think about as active traders. So not sure how we're going to introduce people, but Kayla, do your thing here while we're going one by one. Look at that. Hi, John. How are you? John, you there? Oh,
yeah, I'm here. Can you hear me?
I can hear you now. So we're going to use just first names, if that's okay.
Okay.
I guess for privacy matters. So you're going to just be John today. Is that okay?
That's okay.
All right. So John, we're gonna introduce each one of us, each one of the active traders separately. So you're on first, it looks like. So just give us a brief bio of yourself and tell us a little bit about John.
Okay. Well, I'm a 77-year-old retired physician who started trading in early 2013. I quit for a couple of years. In the middle there, it's 2017, 18 timeframe, because of family issues, back to trading. And like with the statistics earlier described, I've been trading much more this year than in previous years. Like the 2 previous speakers, I prefer selling options. So my favorite strategy is probably credit spreads.
Okay.
And under the right circumstances, I'll do a couple of those and turn it into an iron condor.
Perfect. Okay. Good. All right, John. Good. Let's bring on number 2. Gordon, you're up. Hi, Gordon. How are you? Nice to meet you. Gordon, can you hear me?
Okay.
Gordon?
Hey. I'm here. Yes,
All
I'm
right.
here.
How are
Do
you?
you
Go
hear
and tell
me?
us a little bit about yourself.
Do you hear me?
Yeah, we can hear you.
Hmm.
Can you hear us
I
okay,
wonder why
Gordon?
it's not. Okay, now you can hear me. Okay.
Okay.
I
Yeah,
I am also
go ahead.
retired. I
Okay.
started this. I hear you fine. Okay.
Yep. Go ahead.
Okay. I started trading about 8 years ago when I retired from petroleum refining. I
Mhm.
designed and worked from the East Coast, the West Coast, Northern Rockies to the Gulf Coast, and I wanted something that would keep me busy in my retirement, other than playing golf. I took up trading.
Perfect. All right. Very good. Very good. All right. Let's meet Donna. Hi, Donna. How are you?
Hi, I'm fine. Thank you.
Tell us a little bit about yourself, if you don't mind.
So I'm also retired, living up in Anchorage, Alaska.
Uh-huh.
I came up here to be with grandkids and my son too, but
Okay.
mainly the grandkids.
Okay.
And I started trading. I started the trading education in 2018 and have been trading on and off like since 2019.
Okay. Great.
Had some family stuff going on, so it's been interrupted a few times.
Okay.
And I also like selling premium predominantly. I do some call options occasionally. I do well on them for a little while and then I get burned badly. I do like selling credit spreads and iron condors if it makes sense.
Okay.
So
We'll dive in that in a second. I'm seeing a pattern here with retires. Okay, let's see if Linda is the same way. Linda, nice to meet you.
Yeah.
Tell us a little bit about yourself.
Thank you. Nice to meet you too. Yes, I'll join the retirement group. It's a great way to spend retirement, don't you think?
yeah.
Awesome.
Yeah, I retired from financial services. I've been trading for about 4 years. Donna, I think your style and mine is probably pretty similar. Although I have been starting to trade futures and enjoying adding that to my I guess suite of things that I do.
Okay. Terrific. And next we have Tim. Hi, Tim.
Hey, Lex, can you hear me?
I can hear you just fine. How are you? Are you going to add to the retirement party too, or what?
Well, let me tell you, I retired at a very young age.
There you go.
Just before the financial crisis, the global financial crisis, and which is when I started trading right after that. So it's been about 15 years, and I've traded just about everything under the sun, except for cryptocurrency. But I really have focused on option spread trading.
Okay.
And well, double calendars I used to trade a lot too, but not anymore. So anyways, I've been doing this for quite a while, and it's pretty much been a full-time endeavor for me.
Okay.
So I know you just want a brief intro, so I'll just leave it at that. But my background is in finance and management consulting and one of the big accounting firms. So, yep, that's all I got right now. Thank you.
Great. You bet. And Dick, I think you're last. My gosh, there's so many people in here. This is unreal. How are you? Oh, I don't think we can hear Dick right now. Let's see. Is he? Do you? We're not hearing you, Dick. Do you have a mic issue? Who can read lips? Anyone? Anyone? I can't read his lips.
He's muted.
No, he's not muted. We'll go to Dick. While you're figuring it out, we'll go to Santiago. Hi, Santiago. How are you?
Good. How are you? Hello,
Good.
fellow traders. So I am not retired.
Oh,
sorry, I broke the chain.
Broke the chain.
Yeah, I'm a full-time microbiologist and I'm a part-time trader. I started getting into trading probably back in 2018. I was introduced to it by my brother-in-law, and I've been doing it on and off. And like many of these other traders here and the previous two speakers, I mainly focus on selling options premiums.
Okay, good. Awesome. I think that's everyone. I think, Kayla. So if you don't put someone else out here, then I know it's everyone. I'm counting. I think there's 8 of us. Okay. All right, great. So here's what we're going to do. We're going to ask some questions and learn more about what the active trader mindset is, let's say, the style, that sort of things. A lot of you have already mentioned that you like to sell premium. That's very interesting. I like those answers. I was also a premium seller in my life when I was a professional trader down on the floor. But they call me like a Lexasaurus Rex now because they don't believe people actually were down on the trading floor at any time. But I was. So we also sold premium. It's a very professional style of doing things with options, I'd say. So we want to learn a little bit more about the active trader. Okay. And I'll just kind of snake around a little bit. If you want to just raise a hand or something, you can do that as well. First question, though, is, we keep tossing this word around active trader. What do you think that means? To me, I know what it means. An active trader is you do it for a living, right? That might not be what it means to you folks, especially the retired group here. So Santiago, I think I'll start with you first. What is it? What is an active trader? What does that mean to you?
Well, I guess to me, it's just going to mean something that you do consistently and on a schedule. I don't think it has to necessarily be every day, just personal experience, but just being in the markets, paying attention to the markets, opening, closing trades, maybe once a week, maybe a couple times a week. I think it just really depends on the strategy that traders are looking for. Some people really like that activity. And some people really just want to have the freedom of location and time and just trade once a week, once a month, and set something up for a long period of time. I think I would still consider them an active trader because they're not doing it.
Right. Okay, good. Don, I'll go to you next if that's okay. Active trader, how do you define that in your view?
Right along the lines of Santiago. I don't day trade. I have been in some day trades because they've gone the wrong way or the right way really fast, but I tend to be involved in the market every day, looking at it and trying to decide what I'm going to do. But I don't have to trade every single day. I think not taking a trade is as important as taking a trade.
Words to live by. Very good. I say that a lot. Excellent. John, any thoughts on active trader?
Well, I agree with both. I don't think the frequency of trading is important. I think an active trader is somebody who takes trading seriously, so is likely to have a trading plan. It's frequently said, plan the trade and then trade the plan. And I think that active traders need to do that if they want to be successful. That being more important than the frequency of trades.
Okay.
I like Donna. I look at the market every trading day. I specifically don't trade every single day because I think it's number one rule is to protect your assets, and number two is control risk, and then the rest is work the plan.
Okay, good enough. Linda, do you have you want to add some thoughts to this?
Well, I do trade every day. In fact, I mentioned that I'm starting to trade futures, and with regard to the futures markets, I do day trade. I like I have to admit, it's a little exciting, right? It's fun. It's fun to make the trade, and hopefully it goes in your direction. John, I love what you said about having a plan. That's something I could do a little better with, is having a plan for my trades. But I do like it. I also do like to swing trade though, because I think it might have been Tim, but maybe not. Somebody here mentioned they like to golf. I like to golf too. And so I do like the freedom that swing trading provides, that you can be, in front of your computer for a little while and then get out and do other things.
Yep. Okay, good. Tim, you want to go next?
Sure. I like to golf too. So, I think it depends on what type of trader you are. Actually, I don't like that term, active trader. That denotes to me a frequency, a volume of trades. And
Sure.
I think that's a bad way of going at trading if you want to be successful long term. So I like to look at it as, are you a professional or are you a gambler? And what I do now is I am a day trader, but I trade primarily not directional. I trade spreads on a daily basis, so credit spreads. So that's primarily what I do now, and I am active in the market most days. I'm not trading 6.5 hours a day usually.
Okay.
Try not to trade that much, but I do trade quite a bit, at least a couple hours most days. So
okay, perfect. Okay, and then Dick, is your sound back?
I think so. Can you
Yes,
hear me now?
sir. We're in business. Very good.
All right.
Nice to meet you.
Thank you. Thanks for having me. Sorry about the sound issue.
That's okay.
So just real quick introduction. I left corporate America mid-16. I have 2 young boys I wanted to spend more time with. Been trading full-time since, I guess, mid-17. So retired, no, because I'm a full-time trader. It's how I make my living.
Okay. Great.
Yeah.
So you're more active then. So
I mean, I'm kind of like Tim. I don't feel at all the need to ever make a trade if it fits my plan.
Yep.
I'll take the trade. I'd say I'm probably 85% mechanical and 15% discretionary. But I do not feel the need. I'm sitting in front of my computer, and if it's noon, I haven't made a trade. Nothing's set up.
Okay. Love it. Okay, good. So speaking of that, let's change over to here. Let me just set this up, this next question. So what I'm going to ask about is what's your trade idea generator? Okay. And what I mean by that is how do you decide to make a trade? Now, the reason this I think is important is, from my perspective, we didn't have that from the professional world. We responded to markets and we bought on bids and sold on offers. That's what market makers did. So we didn't have a trade idea generator. It didn't exist. When you look at a screen, okay, and you look at all these markets and all these stocks, you have to have some kind of concept of what you're going to do. So, briefly, and we also don't want your secret sauce either, but what do you use to generate a trade idea? And it can be technical, fundamental, it can be implied volatility, those kinds of things, or something else. So let me start up top with John. At least it's up top to me. John, we'll go around the board that way. So John, I'll let you go first, if that's okay.
It's hard to answer that question, but I like to look. Let's talk about bullish trades.
Yep.
When the market overall is bullish, I like to look for uptrending stocks. I like to look specifically at stocks that have decent fundamentals. Although the technicals are more important when it comes to swing trades that are, getting into a credit spread. I think the sweet spot for me is like a 30 days to expiration. I like to see decent premium. Let's say if it's a $5 spread, 20% of that. So I'd like to get $1 credit on a $5 spread. That to me is the sweet spot. If I'm doing it as an iron condor, maybe 25% of the spread would be the sweet spot. And you tend to get that using deltas in the mid-20s. And it's working. In downtrends, I'm less important and less care about the fundamentals. In fact, I tend to look for stocks that are weaker within their industry groups. So that then it would be a fair call. Same issues.
Got it. Okay, good. Donna, let's turn to you now. What's your trade idea generator, would you say, just generally?
So I have a list of favorites that I go to and just watch to see how they're doing. And I generally set alarms or alerts as to when I'd like to get in a trade. If it's crossing a fib or it's crossing a couple of moving indexes, then I will generate the trade if it makes sense at that point. Recently, I have been more active on a charting platform called Wealth Charts and have been using some filters that they have to generate ideas.
Okay, great. That's from Wealth Charts from Rob, who was on earlier, I believe.
Yes.
Good. Santiago, what do you think about this, the trade idea generator? What do you like to have a look at?
So probably for the past year, my strategy has been extremely simple. I've been doing more automated trades using option alpha. And so I only trade SPY and I only trade iron butterflies. And so I set up a bot to just basically look at the shorter time frame trend of SPY and then place my iron butterfly in the direction of that trend. and that's it. And then I just let the bot take over the rest.
I love the bot. Wow.
Mhm.
I need one of those. Sounds good. Okay, great, Santiago. Tim, what's your trade idea generator?
Well, I'm not a directional trader anymore. Primarily, I'm a mechanical trader, and Dick and I are a member of a trading group with Navigation Trading, and we generate mechanical, back-tested, probabilistic trade ideas back and forth. So I'm constantly looking at new ways to trade and new, ideas, but they all have to be based upon probabilities. As you know, most people here are traders with options. There are certain probabilities built into options, so we can take advantage of those, especially if we're selling premium, selling credit spreads. So, but you have to know what you're doing, obviously, otherwise you can get your head ripped off. So, yeah.
Okay, good. Thank you, Linda.
It's going to be very similar to what we've heard. So, like John, I like to look at the big picture, the market direction first to decide, do I want to go bullish or bearish? And then Donna and I, we're very similar. I use wealth charts too. I love it. Rob has built some incredible tools there, his scanners there. I actually have some of Rob's tools that I use to help trigger trade, particularly my futures trading. So I like to go with the market, go with the trend, and then use those scanners to help find the stocks that are moving in the direction of the market.
Okay, great, thank you. And Dick?
Yeah, as Tim mentioned, a lot of back-tested mechanical type of trades. That's probably 80 to 85% of what I do, and then I'm just real big on price and levels, fibs. Like San Diego, I probably have close to 50% of my trades automated now.
Okay.
So sitting back and watching, kind of in that phase of it now, but ultimately the goal is not to have the same amount of screen time that I do today. At least the mechanical part of it.
Right. Understood. Okay, great. Thanks for all that. That's awesome. So next question is going to be around, risk management, let's say. So I think we're all pretty keen, if we're active people in the market, that we have to have some mechanism for managing our risk. So what I'd love for you to comment on, if you can, is, how do you manage risk, first of all? Okay, that's number one. How do you size your trades? So what size do you append to these trades? And I know it's probably going to deal with how much money we have, but we want to hear a little bit about that. And how do you deal with the losses, right? Because as we all know who have been in this industry, you can't win every time, right? You're going to have losses. How do we deal with that stuff? So I hope that makes sense. Dick, if you don't mind, I'm going to snake back the other way. I'll start with you first. Is that okay?
Sure, absolutely.
Okay.
So if someone new that wants to get into trading and they ask, so what's your advice? If they have some basic knowledge of trading, you have to have your risk management in check, and you have to be disciplined about that. So for me, it's maybe 5 to 7, some circumstances, maybe 8%, as far as my total risk per trade.
Okay.
And that's on the downside if I got a condor that blows up, or I'm long options. That would be the most that I'd want to have on the table.
And that was 8%, Dick? Sorry, that you said 8% per trade?
No, 5 to 8. Yeah, eight would be on the high side.
Okay, understood.
Yeah.
Okay, great.
And if I'm feeling, not that I trade on feelings, but if everything's setting up and it looks like you can press it, maybe I'll press it to 8, but never more than that.
Okay, got it.
Dealing with losses, I think it's part of the game. You have to get the emotion out of it as much as possible. You can't trade without. Well, I guess you could trade without taking losses. You probably wouldn't make any money. But you take a loss, you're that much closer to the next win, right? So
right.
At least if you're probability trading.
Right.
So I try to stay unemotional. losses are going to happen. It's just part of the game, and you just have to take them in stride.
Okay.
You missed one other part. I'm sorry if I did.
No, I think you got them all. That's good. Thank you. Linda, do you want to go next? So if you need me to recap what I was asked, I can do that.
Yeah, go ahead, Lex.
Yeah. So what we want to know a little bit about is, how do you manage risk? How do you deal with losses, and how do you size your trades? Those three kind of headings.
Yeah. So for me, I look at managing risk and sizing the trades. They're kind of, they go hand in hand together. I have a small account that I trade, and then I have larger accounts that I trade. So on the smaller account, obviously the trade size is going to be a larger percent, maybe 5 to 10% of the account balance. On the larger accounts, keep it down to no more than 2% per trade. Handling the losses, you have to let it go. For me, I have to let it go. I have to say, okay, that trade's behind me. Did I, when I go back and look at it, did I follow my rules? Was there a reason to get into the trade? Did I, like so many people do, hold on to my loser too long in the hope that it would turn around and come back? But ultimately, I have to let the losses go, try and learn from it, and move on. I was attending a webinar, and I actually heard someone say something that I really think makes sense. This trader said, a lot of people look at their losers and they try and learn from them. He said, okay, that's fine, but isn't it better to look at your winners and learn from those and then repeat? So it's kind of, I really heard that message, and that means a lot to me. So I try and focus too on what was happening when my winning trades went through, so that I can repeat that, see that scenario again, and repeat that again.
Okay, great. Thanks. Tim, what do you think? Oh, Tim, you might be on mute. There you go.
There you go. Yep. I just had to grab my mouse. So I'm in the camp of pretty much about a 2% to 5% risk per trade.
Okay.
And I look at all my trades, my open positions combined for what my total risk is. And I try to make sure that's not more than about 7 or 8% if they're correlated. But I try not to have multiple positions on, to be honest with you. Most of the time I don't. And as far as the losses, I've been through periods of drawdowns. I'm sure everybody here has. And they can be devastating on your trading psychology. So I've had to work on that. The last, I would say, a couple years, I've really worked a lot on trading psychology. So there's all kinds of resources and tools out there these days, and support from different groups. But it's really, this is more important than the technical part of trading. Most new traders don't understand that. I didn't understand that when I was new. But handling losses and handling your trading psychology will keep you in the game for the long run. If you learn how to do that. So, which is what you got to do to be successful. You got to be able to be in this for the long run. So, and not blow up your account. So, I don't want to talk too much about that. But anyways, hopefully that helps.
Yeah. Thank you. Santiago, thoughts?
So since I am using a bot for the majority of my trades, the bot is managing the risk. So if an iron fly completely blew up, that's going to be about 8 to 10% of my account. However, my stop loss is set much lower than that. So, that would be the worst case scenario. Handling losses, like Tim said, it's something that you're going to have to experience as a trader, and that psychology of seeing that red in your account can sometimes affect you. But what I've done with at least my bots is I forward tested them several months, so I have an expected win rate. And so if I'm in my live trading going below that win rate, that's probably when it's going to start affecting me. But if I'm having a couple losers here and there, but it's not really affecting my overall win rate, then I'm fine with that risk, because that's sort of what I expected. Excuse me. The size of my trades, I'm only doing one at a time, one iron fly at a time with a bot. And once the account gets larger, then of course I'll scale that up. But as of right now, I just want to make sure that I can consistently get these winners. And then once my account reaches a certain size, I want to take that profit off. So if I do lose, then I already am enjoying my profits.
Okay. Terrific. Terrific. Okay, Donna, what are your thoughts on this, on the risk management part of it?
All right. Well, I'm also keeping it to about 2% of account size, but I have recently started doing more covered calls. And with that, I've gotten into some larger stocks. So those have a bigger chunk of my overall asset base. And I'm letting those run and continuing to do the covered calls as a strategy in that. For credit spreads, really trying to keep it to 2% and not more than that.
Okay.
And I have taken some big hits. I'm in the process of reanalyzing things because I have been hit, especially late August, September, with some huge gaps and total losses. So I'm digging out
at
the moment and reanalyzing what I'm going to be doing with those. There were a couple I probably could have reacted differently to, and I think that was an emotional response. I could have, put an iron condor on as opposed to just taking the whole loss, but I didn't. So I'm in the process of learning and
great.
Redoing my game plan.
Okay, understood. Thanks for that, John. Any thoughts on this one?
Well, so for probability trades like credit spreads and iron condors, my maximum allocation would be 5% of the account size. That being the margin hold, being no more than 5% of the account size. In the recent market, I've not been trading full allocations. With the volatility and the whipsaws going on, I've tended to use half of my maximum allocation until right, like maybe the last day or so, where it appears that we're in the Santa Claus rally. With the more directional trades, such as credit spreads or butterflies, it's going to be 2% of the account size would be my maximum allocation. Back to the credit spreads and so forth, I never hold them. I should never say never, but I don't remember in the last 2 years at least holding a spread until expiration. I've learned that in that last time before expiration, the volatility can take a winning trade and kill it. So I tend to take advantage of the back testing that TD Ameritrade and others have done in that 50% of your maximum return on investment seems to be the sweet spot. So I tend to get out at about 50% of my max ROI. The exception being, there are some trades lately that have moved up huge really early. So if a spread gains 30% of its return within the first 3 days or so, I'm gone. I'm going to take that money and put it into a different trade. And I will be in multiple trades at one time, but never more than 50% of the account in the market at any given time. Okay. So, and then as far as handling losses, I mean, they just happen. I don't care. In fact, some losses I've been happy with. Just because the market does what it does, and it was a good trade, and there it is. I learned several years ago that mindset is sort of the belt on which all strategies rest, and that's the most important thing to me. Is so I don't worry too much about the losses; they just happen.
Yep. Okay, good. Thanks for that. So someone asked too, and we won't go around the board if you just shout it out, but I think I know the answer to this. But when you talk about percent of risk of your account, you're including just cash or the whole account, the stock value, the option value? I'm assuming it's the whole account value. Is that you measure that percent on that? Is that accurate?
For me, it is.
Right. It's the whole account value.
Yeah, got it. Okay. Hope that answered that question. I would say this about the losses versus gains. I too experienced both sides of the equation, right? On the trading floor way back when. However, my happiness on the gains was about 10% of my sadness on the losses. So I couldn't get myself out of that mindset. So I was 10 times more sad on the losses, no matter how big the loss was compared to the gain, quite frankly. So it could have been a fraction, but that was just me. I tell you, the trader community was very much similar to that. We just couldn't handle the goofiness of losses. They did happen though, right? So, all right, I think time's running. We're gonna do one more, and the last one is going to be this. What do you think, if anything at all, and you might not have an answer here, is the industry missing in terms of tools or technology or things you'd love to see a platform have? What is that one thing, the magic little wand in the box that would make your lives much better? Now, Santiago, I'm going to start with you because you have a bot. So you're using a bot, and that's a lot of automation. So is there anything else out there in your mind that we're missing in this industry, the options industry at large?
I don't know if it's anything that could be changed at the, like a broker level or a tool, but one thing that I would love to see, and I think a lot of other traders would like to as well, is the removal of the pattern day trading rule for accounts under 25K.
I think love you already. By the way.
Okay. I think a lot of traders would really enjoy that. I think that's why some, are moving towards futures, because they don't have that rule. And with bot trading, you could do the scalping so much easier with all the different types of options strategies if we didn't have that PDT rule. So that would be one that would have my vote, definitely.
Perfect. Okay. Tim, I'll go to you next, if that's okay.
Sure. Yeah. A pattern day trading rule just never made sense to me. You can throw your money away in a casino, or certainly, with buying premium or buying, stocks or futures, and, all day long, right?
Sure.
Anyways, enough with that. So I think the industry itself does pretty good with tools and technical. I mean, the technical component for trading has gotten to be way too carried away. So believe me, this is from a guy who's very technically oriented, and I've gotten away from most of it. Like Marcus was doing, he was drawing boxes. I like that. Trading doesn't have to be that complicated. We think it does, but nothing back tests on technicals hardly at all, if you ever want to back test technicals. But anyways, I went down that road. I don't do that anymore. So what I think would really help is the trading support like this, right? A group of traders that are successful. What are you doing to be successful? And then let me point out one other thing, which is transparency. There's so many educators out there hawking their wares, their tools, and selling, making money off of it. I could write books all day long and sell stuff like that. Sure. But am I really trading live, and I'm being successful? How am I being successful? How am I dealing with all the issues that we're just talking about here? And that kind of support does not typically come from your broker. So you got to go find it somewhere else. And it's very tricky to find it somewhere else, because a lot of people are out there touting that they're experts when they're really not. They're really selling stuff. That's all I got. Thank you.
Okay, Tim, thanks. Let's go, Dick. Let's go to you next, if that's all right.
Sure. I guess maybe even 3-4 months ago, it would be all about automation. But since I found a service that I'm getting comfortable with, I'm very excited about the automation, and I'd say it's probably about 80% there, at least with the SPX. I know, San Diego, Option Alpha has been trading the SPY for some time now, but automation with the SPX, it's, like I said, phenomenal, but I think it can go a little bit further.
Yeah. Okay, good.
On top of the pattern day trading rule, that's
that's
ridiculous.
Understood. John?
Well, I don't have a whole lot to add to what's already been said. I used to be concerned about the day trading rule. That's no longer affecting me personally. Um, and although I've done some day trading, I'm not very good at day trading, so I tend to be more of a swing trader. But it does happen every now and then. I don't have a whole lot that I can think of that I would want things to change, other than maybe myself learning a little bit more about the options for automating. That's it.
Okay, good. And ladies, we're leaving you guys for last. Donna, why don't we start with you? Anything
I really don't.
that you're craving out there that would help your trading?
No, other than the day trading rule. Okay. There's been times I've stuck in a trade because I was afraid of getting flagged. So
the darn day trading thing, I know. Okay, Linda, any thoughts on this beyond the pattern day trading?
Nope, I like Tim's idea too of having a group of traders to talk to and learn from. Definitely second the day trading rule.
All right. Well, I guess I got to send the letter over to FINRA SEC on this thing, right? Darn. Well, listen, this was really fun. Our time's up. It was great to meet you. You guys did an awesome job. I really enjoyed this panel. This was fantastic. I'd love to see and hear your thoughts for people who are actually doing this. This is fantastic. So really, thank you for coming on. I appreciate it. I hope it wasn't too hard.
That was great.
I'll look forward to doing one of these with you. So, all right. I think we're going to take a break now. Thanks, everybody. Good job.
Thank you.
Thank you. All right.
Thank you. So we're going to take a little break. I'm not sure how long it's going to be. It's supposed to be 10 minutes, but we're running a little late. So maybe it's going to be about 5. So we're going to do that and come back with Sam on the back end of our break. So see you in a little bit.
Trading fees holding you back? Enter the new age of trading. Most brokerage firms typically charge 65 cents per options contract. So for active traders who trade hundreds to thousands of contracts per month, these contract fees quickly add up to substantial amounts. But with Tradier Brokerage, we offer unlimited equity and options contract trades for only $10 a month. Available on web, mobile, and desktop. Start trading today at Tradier.com.
The world is evolving, and you are different. Choice, it has always been ours. You can chase the trend, or choose to trade with purpose. It's time to find the signal through the noise. We'll meet you at the beginning.
Are trading fees holding you back? Enter the new age of trading. Most brokerage firms typically charge 65 cents per options contract. So for active traders who trade hundreds to thousands of contracts per month, these contract fees quickly add up to substantial amounts. But with Tradier Brokerage, we offer unlimited equity and options contract trades for only $10 a month. Available on web, mobile, and desktop. Start trading today at Tradier.com.
The world is evolving, and you're a different choice that has always been ours. You can chase the trend or choose to trade with purpose. It's time to find the signal through the noise. We'll meet you at the beginning.
Hello, welcome back. Hope you had a good break. Got a little water, some coffee. We're going to move along now. So next up, we have Sam. I'm going to mispronounce his name, Parikh. He's going to tell me how to say it when he comes on. Coming up next from Smarter Trading 411. This is going to be great. Hi, Sam. How are you? Oh, can't hear you. Let's unmute Sam. Sorry.
Okay. Hey, how are you?
Good to see you, man. I love the background. You were right. You were going to change your background. It looks fantastic. I love it. I'm going to let you get rolling. I'll let you introduce yourself, okay? So you can get as much time as you need, as you can in that 30 minutes. Is that okay? How do you say your last name, by the way?
Parikh.
Parikh, I got it. Okay.
Yeah, good. Sam's easy. So I need to share my screen.
Yep, go ahead and do that now. Hit the share screen or the present button down there and then share screen.
Share screen and then
pick the one you want. Let's see if we get it here and we'll add it to
that one. Yep.
Okay.
Okay, you see it?
There it is. You ready to roll?
Yes.
Okay, I'll be on in about 30 minutes or so, okay?
Okay, great.
All right.
Hello, everyone. I'm Sam, Smarter Trader on Twitter. I run Smarter Trading 411, which is a trading site. heavily used for options and stocks, lots of options. We have some really great traders in our room, in our community. And I've been doing this for about 8 years here. Oh, hold on a second. There we go. Okay. Okay, who's that? Okay, so we've been doing this for about 8 years here and have grown pretty big, up to 1,500 to 2,000 paying members who utilize our services every day. I'm uniquely different. I'm different than any other service. I've created a new methodology, the way we do it, the way we trade, and we'll go over some of that stuff. Okay. So the first thing is our strategy is based on expect zero. Okay. With options, it's all about risk management and what you can lose. And when you do that, when you expect zero, you trade different. Mentally, options is a mental thing. Okay. It's a big mental issue. So the first thing that happens is if I come in there and somebody says, hey, I got this huge account and all this stuff, I say, I don't really care about your account. Okay. First, we got to, any position you want to take, you want to expect zero. So what does that mean? If you want to put in $1,000 and say, I like $1,000 option, but I want to do 50% stops. So what we do is we say expect zero. That means your $1,000 would go to zero. So instead of buying $1,000 worth, if you want a 50% stock or stop, you only do 5 contracts or $500 worth at $1. So you're buying less. So when you're buying less, you already like hit your stop. You don't even got to worry about it because stocks go up, stocks go down. Options go up very fast, up and down. You buy an option at 1, let me tell you, the craziness of options and people that do this, I just don't understand how they succeed. This is why we're different. You buy something for $1, say it's 90 cents to $1. In 10 minutes, it goes to 40 cents to 50 cents and they're sold out. 2 hours later, they're back to even. The next day, they're $22 and you got wiped. So you have to expect zero. I mean, that's just the nature of the beast of what options are. And, as an example, once again, if you want 10 contracts at 1, and so that's $1,000, then you only buy 5 at 1. So it's the same thing. Okay. Why buy less? Why expect zero? It takes all the emotions that you have out of trading. If you put in 4 positions and you have $4,000 positions and they all go to zero, you already know it's zero. You already know it's going to be zero. So you expect that. And if you expect that, you don't freak out on moves up, moves down, and everything else. Okay. And options go fast. This is not, a game that you're going to go buy something and it's going to move half a point a day. These aren't the ones we play. We play all the big boys, the things that move. Okay. Buy less and relax. Okay. This strategy is basically buying less stock, buying less options, whatever you want to do than you were initially going to do. So you're taking risk off the table and then you're adding it back as we move forward. And we'll tell you that. Okay. And I'm telling you, people that have bought into this strategy do very, very well. Extremely successful individuals. And we'll show you some later. Okay. Stops don't work. Stops do not work in options. If you think they work, you're lying to yourself. Okay. And why is that? Why do stops not work? Because if you buy an option on NVIDIA at $2 and it drops $5 in 3 minutes, and it just did that today. Okay. That option goes from 2 to 120. At 120, you're sold out probably. And then 5 minutes later, it's back to $2. A very difficult game buying, an option and putting a stop in. It doesn't work. So just buy less quantity and then you're okay. Okay. And then the other thing around the thing is with expect zero is you can reverse direction. You don't got to sell something. You already expected it to be zero. So you can change the way you trade and how you trade. Okay. So very interesting. True risk. This is what I call as true risk. Most people lie to you. They don't know risk management. Okay. This is risk management 101. This is risk management for beginners. Yet no book teaches this. If you have $100,000 account, what's your true risk? Okay. So your true risk is when you expect it, if everything went to zero, how much you had in the market, because it can at any moment, it can go zero. And I'll tell you my story in a little while, is you when are you going to get upset? At $100,000, are you upset if you're down 20K? If you're down 30K? If you're down 40K? If you're down 30K and you're upset, that means that's your true risk. Your risk is only 30K. It's not 100K. Because let me tell you, in options, if you put in 50 grand or 80 grand on any particular day, every single position can go to zero, either side, every single position. And it has for many, many people. So you have to define your true risk. And then you take your true risk and you set up how you want to go manage that risk. But it's not the size of your account. The size of your account is irrelevant. If you have $1 million and you're going to get upset at 50,000 or 80,000, then your risk isn't $1 million. Because what if all those things just blow up? You can't do that. So you have to tell me or whoever that's helping you with this stuff what your true risk is. I say it all the time. And people, once they figure that out, your trading becomes different. It becomes different. Okay? News trumps charts. Okay? I understand all you guys like charts and all this stuff. I don't need them because I have this memory. I remember every number of everything from years and years back. Okay? And I watch literally 200 stocks. I can tell you what it did on month from now, 2 months from now, wherever. I understand. So, but here's the thing with charts. Charts get you. You go look at a chart at night and say, oh my God, this is a complete breakout. The next day it goes down and you're like freaking out. Okay? You don't need it. What you need is you need numbers. Okay? If you're going to go look at numbers. If NVIDIA breaks 500, 502 accelerates it up. Okay? If it doesn't break 500, it's going to go back down. So you just need numbers. Okay? So very, very interesting there. But the news, what news is going to move the stock? What news is going to move the market? What news is going to move an industry? That's what you're trying to do. And that comes very, very, very fast. And when it comes that fast, you know, Sam, that's me. I mean, obviously, I decipher it very, very fast. We put it in the room. You know, when you got hundreds and hundreds of people, people feed me news. I mean, everybody asks, Sam, what news services you use? I say, I got 1,500 people feeding me news on all their services. And we analyze it within seconds. Okay. How do you analyze news? How do you analyze news? See, this is really funny because if you go to a bull, and they bring these people on CNBC all the time, right? And half of them are clueless. Okay. Look, I'm the one guy, I'm going to tell it like it is, you know? So if somebody says, oh, we're short for 3 months, it doesn't matter what news you give them. He's going to view it as negative because he's biased. He's biased, right? You can't have your biases in anything when you're analyzing news. If something comes out, you have to look at from this angle, that angle, and the third angle. You have to look at it from every single angle, and you have to be able to do that within minutes. And if you do that within minutes, you can do very, very well. Okay? Let's go to the next one. Trading is not easy. News matters. Go slow. Build your account. And then decide if you want to take shots. Okay. So this is how we do it. So let's say you starting with 10 grand. Just use a number. 10 grand. And you say that's your true risk. You know, maybe you have a 50 grand account. And you say, I'm going to do 10 grand with options. So your true risk is 10 grand. So you take that 10 grand and you divide it by maybe 6 weeks. And you divide it by maybe 5 or 6 plays. And what you want to do is you want to build it up slowly. So maybe you decide to play a few things and you build it up for 2 grand or 3 grand. So now you've taken your 10 grand to 12 grand or 13 grand. Then you decide, okay, now I want to go bigger. I want to make bigger money. So you play with profits and you take shots. So like, you know, what we did yesterday is we bought SMCI, which is the 290s. We bought those at, I forget what it was, $2, and it went to $4. At that point, we didn't sell them. We bought the 300s at 135, which was the roll up. So when we sold them, we already had the next one. So those went to 8 and then we sold them. So the 2 went to 8 and we're already in the next ones. The 300s at 1.35. So what did we do? We took that profit, we put it into the next roll up, but only put a portion of that profit. And then we sold that one and we rolled up again. And that's how you're playing with profits. You're playing with profits and you're taking profits and you're building your account, and you can take a shot when you're ready to take a shot. So if you're doing $200 trades and you say, I'm going to take a shot, maybe you do $1,000 trade, but it's only with profits. This is risk management 101. Okay. All about the news all day long. It's about the news. What comes on? It doesn't matter if you hate CNBC or like CNBC or hate Bloomberg, like Bloomberg, you have it on because if a news item comes up, you are ready within seconds. And when you can know that, you can do what you need to do either way. Okay. I'm going the wrong way. Hold on. Playing with profits. We talked about that. Managing your account. Exit and entry points. You need to know that. So when you buy something at 2, what are you trying to achieve? 3, 4, 5. Maybe you want to achieve 4. And let's say it gets to 380. So you say, I'm gonna sell it at 4 and I'm gonna go buy the next one. Very good. Nice. Very, very simple, and you need to know. Asking anybody for an opinion doesn't work. It's your account. If you talk to 1,000 people, all 1,000 people have different scenarios. Their accounts are different. Their account sizes are different. So how you choose to do something is not what they're going to choose. If you say, hey, is NVIDIA going to go higher? They may say yes. They may say no, but they may be in at $5 cheaper than you, right? So interesting. Excuse me. So very, very interesting. How to get better. Learn to think regardless of your position. This is very, very important. So you may have 5 positions, and let's say you were short, and the CPI comes out yesterday. Those guys came on TV and said, oh, if this you got to wait another month. Why do you got to wait another month? It just came on your behalf, right? So very, very interesting. On any particular day, every single thing you have can go to 0. If you know that, so let's say you have 3 positions and you're short and they're all puts and the CPI comes out. And you say, oh my God, this is going to be good. So you have 2 choices because we're not all, computers. You have 2 choices. You can sell those 3 positions and save 20 cents or 50 cents on each one. Maybe you save $500. Or you can say, I expected 0 on those, and I'm just going to go buy these 2 positions at open. So yeah, you got beat up on these 3 positions that were short, but you expected 0. But you rip these positions on the upside and you make 20 grand. So you make 20 grand on the news, you lost 3. If you believe in 0, that works. That works. Very, very interesting. This is a different way to play options, but it works if you really do it correctly and you don't lie to yourself. Don't lie to yourself. What does that mean? And people lie to themselves all the time. They go to Vegas with $1,000. They say, I'm only going to lose 1,000. And then they go hit the ATM and do this. Can't lie to yourself. That means don't say stuff. I mean, stuff that I've heard over my time trading, tons of it. Oh, I'm going to buy 50 options, but if it goes down 20%, I'm going to sell it. And you don't sell it. It goes down 30%, you don't sell it. And then you buy more. This is just the nature of the beast. This is what people do. But you don't do that if you expect 0. Because if you expect 0, you just let it play out. Now, it doesn't mean take it to 0. It just means, trade it and expect 0. So it's a little bit different. Hope you understand that. And take profits and roll down. Okay. I'm sure you're interested in this. What happened yesterday? Most likely in your lifetime, or anybody's lifetime, you're never going to see this 0 to 5% interest rate hike cycle again. You're never going to see it. 0% for all these years goes to 5%. And we're waiting. And we've been waiting for a month, 2 months, 3 months, 18 months. We're waiting. And we finally get that news of a lower CPI. Okay, a lower CPI. A once in a lifetime event. And as soon as it happened, I'm on my morning call at right 5 minutes before the news came out. And I had said, if it's a low CPI, this thing can go to 4,500. And immediately it came out and SPX was up, I don't know, 10 and went to 25 and then 30. And I said, this is going to 4,500 SPX easy. Straightforward, easy news analysis, once in a lifetime CPI event. So you analyze the news. You didn't matter what side you were on. And then you played the news and you knew this news event. Yet, if you go on TV and you heard all these people, person after person saying it doesn't matter. When are you going to see this again? When are you ever going to see 0 to 5% interest rate hike cycle in your lifetime that's going to give you a reversal? It finally happened. It was so bullish, it was unbelievable. People are trying to say, well, I'm shorting this. I'm like, you're killed. You're going to get smoked. Simple, 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 simple. We hit tons. There's so many. We'll show you some of these. Very, very interesting because people did great. I mean, lots of people made hundreds and hundreds of thousands of dollars with us yesterday because it's the news analysis. It's the strategy. It works. It works. It works. Why is CPI so important? See, people don't understand this. Because if they stop raising rates, the small companies who are all at risk of default if the rates keep going up and they can't reborrow, that goes away. The default risk goes away. Commercial real estate. Let's say he cuts rates in 6 months and he cuts them 2 or 3 times. That means commercial real estate, all those people that need to refinance in 2025, they can refinance at the same rate, maybe a few points higher, but they won't get killed. They're alive. And all the small banks, their risks go away. I mean, this is not rocket science. This is very straightforward, but nobody talks about stuff like that. Okay? Tips, some tips for you. And obviously I'm going fast here because on time. Don't fall in love. Don't fall in love. This is a good one. Because people fall in love. Oh my God, I like Tesla. Tesla's at 100. It goes to 200, 300, 400. They're in love with it. Goes to 300, goes to 200, goes to 100, goes to 50. You're in love with it. Don't fall in love. Here's Sam's thing. It's really, really funny. If I have NVIDIA and I make $100,000 on it today and I sold it, I want it to go down, go straight down. I don't care. I'll buy it again when it goes down. If I'm not in it, don't fall in love with it. Don't fall in love with any single position, any single stock. You're trading, even if you're investing it, it's okay. Once you've sold it, if you held it for 2 years and you sold it, you're out of it. You don't have to be in love with the stock, okay? Only care till you sell, okay? Be flexible. Because you expect 0, you can go from calls to puts in seconds. Okay? Very, 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 very important. Trading is about information, not about charts. Okay, let's talk about this. Some of this stuff. This is some interesting stuff. We had so many of these. Literally, if you go to my website, not my website, it's on if you go to Twitter, Smarter Trader, you'll see all these. Hundreds and hundreds of these things. People making money. This guy, Andrew, $550,000 in a trade. These are people making this type of money on smaller investments. They're not investing $500,000 to make $500,000. They're investing $50,000 to make $500,000. That's the leverage of options if you know what news is, okay? And you have to understand the news, right? So very, very interesting there. So there's a lot of these comments there. You should go read them. Sam knows news. Sam, first day with the service, made a bunch of money, blah, blah, blah. But we do 3 things. We give you a morning call, and we talk about what's going on in the market. We don't talk about what all these things people on TV are talking about. Oh, what's going to happen in 2 months, 3 months, 6 months? We're traders. We want to go in, we want to go out, we want to sell, we want to roll up. This is what options players do. And obviously with Tradier gives you these great deals and stuff, and you can trade all you want. And obviously with us, you can do that too. And through Tradier or whoever you're going to go through, and you can do very, very well. Okay. These are things what we're saying. I've been trading with Sam for 2 years. His play-by-play analysis is the real deal. Literally hundreds and hundreds of these things, people that have quit their jobs, they're trading with us full time, etc. Take a few minutes and read all these. You're a legend, first day. It's the reason is I'm uniquely different. I'm uniquely different. And so I may play 5 positions, 6 positions, 7 positions. People do whatever they want to do. All we do is provide information. We don't give recommendations or anything. So, but we give you brutal honesty. We tell you, this is going to go. This is not going to go. If it hits this number, it's going to go. I mean, I can tell you right now, if Lily gets 609, it's going to go to 631. It's that simple. Very, very easy. But if it doesn't get there to 609, it's not going to go to 631. So you can buy it before 609 because you get it cheaper, right? If you buy it at 600 and goes to 609, you get it cheaper. Or you can wait till it breaks 609 and buy it, and then you've paid triple, but it's not going to go down, right? So different ways to trade based on numbers, not based on charts. And those numbers are based on premiums, guys. Premium. So what does that mean? It's the amount that you pay for an option. Okay. We do it differently. We do it by premiums. What is the fair value of an option? Black-Scholes doesn't do it. It's old. It's an old model. I came up with a new model. It's an old model. Okay. More things about what people are saying here. We traded these. Just wanted to thank you for teaching me how to use your stock thing. So people have done very, very well. And if you're an options trader and stock, now there's a lot of stock traders too, because if we're buying options and those options have to go up, if for us to make money, that means the stock goes up, right? So just a lot of these things here. What do we offer here? Let's go back here. And if we can go through some questions, if we got any time left, we can go a few minutes for questions. Lex.
Here I am. Can I take? Can we not share the screen, or do you still need it?
Nope.
Okay. Beautiful.
Well, I need it in a minute, but not now. You can go.
Okay.
Yeah.
So
how do I do that?
We can share it again. Good. So here's one that just popped up here. I'm gonna just pop it up there so you can read it. Sam, do you follow unusual option activity?
I do not, but I know of it. I mean, because our room is big and people mention this stuff. But what Sam uses premiums, right?
What do you mean by that? Just so we're clear. So when you say premiums, are you talking about implied volatility levels? What?
Nope, the premium you pay for an option.
Okay.
If Nvidia, say it's at 590 or it's 490, right? The 500s are $3. Is $3 overpriced or underpriced, right? So if you know something is mispriced and it's $1 lower, if the thing moves $1, you're going to make $1 or $2. If you overpay, and even if the stock goes up, you don't make money, right? So we use premiums.
Okay.
Judge. So nothing else. It's premiums.
Got it. And then the same gentleman, I think, asked, do you trade 0 DTE options?
Yes, we do lots and lots and lots of those. So we trade everything from SPX to ROT, NASDAQ, and then all the big boys, right? Because what we're doing is we're trading, once again, for active traders.
Okay. Yeah. So you mentioned some of these indices, and you when you said big boys, I'm assuming you mean the big liquid stocks, Apples and Teslas of the world. Is that?
Yeah, exactly. Nvidia, Tesla, SMCI.
Okay.
Lily,
so you like,
Lago.
Got it. You like liquidity. You like movement. You like, open interest, all those sort of things.
Yeah, but we look at premiums. I know premiums like nobody knows premiums. I mean, anybody that comes in my room would like freak out on premiums. I can tell you what the pricing is going to be. Like if Nvidia's right now, not by my computer, but let's say it's at 490. I can tell you what the 410s are going to be if it goes up $6. I can tell you what the fair value would be, and it'll be within 10 or 15 cents of it. I mean, it'll be that accurate. That's how accurate we are. And there's a method to this, and you can learn a lot of that with our service.
Nice. Okay. And then did you develop an option pricing model of your own? You said you don't like Black-Scholes, and I agree with you. I don't like it either. So do you have your own model?
I have my own model. We tried to code it up, spent several $1 million doing it, but it's about 70% accurate. The rest is in my brain, and we can't AI my brain, and that's what we're trying.
Not
if we
yet.
can AI my brain, then I can, because I'm very accurate on almost everything. It's just eerie how accurate it is. So, something will move within 5 cents of where I said, So
yeah, cool. And then so you're absorbing news data, right, and coming up with some trading ideas from news, I think you said. Is that accurate?
Yes, everything is based on news, and news generates it. Like, let me tell you something very interesting. So we were in Lilly. We were watching Lilly last week, and Kramer came on, and he said NVO is going to release a study this over the weekend, right? We immediately bought the on Lilly. We immediately bought the 600 calls, right? We bought the 600 calls at $1.30. Within 15 minutes after the market opened, they're like $13, $14, from 1 to 14, right? But it's based on news. If there was no news there, we weren't going to go buy those, right? So it's based on news. You've seen a little bit of a movement, but you knew we had a number out there. If you have a number that, hey, 600, 609 is going to come, and you get a news blip, it's going to move that, right? It's going to move it. So very active trading room. We generate lots of ideas. So, and we tell new people, come in here, come into the room and learn 4 or 5 different stocks. You can't learn 50, right? I mean, learn 4 or 5. Become an expert in those 4 or 5. Learn the premiums on how all those are every day, all the time, and you can succeed. And you don't have to trade nonstop, right? You just trade when it's right for you to trade. Okay.
Now, would you ever have a scenario where it's the opposite of news? There's no news, and you sell premium in that situation.
Oh, yeah.
You do that as well?
Yeah, we do that as well. You can do it however you want to do it. We do it various different ways. The selling premium, when things are very overpriced and things aren't moving, very easy to sell premium. Like right now, Tesla, if you want to go sell Tesla puts, you can go sell Tesla puts at 210 or 215. It's all the way to 240, right? It's not going to go to 210 this week, right? It's not going to go down this week. Doesn't mean next week. I'm not saying go out 3 months or anything like that. We just give you information for this week. Yeah.
Okay, good. Let me show another question from the Colonel. Can you read that?
Yes. Do you go over the reasoning catalyst for you? Yes, we go over all the reasoning. If you ask, it's all out there. But I basically say it. We set up the call, or most of the trades on the morning call, and as news comes in, we do other stuff, right? And we change our tune depending on news of the day as it's coming. But yes, we tell you exactly the why. So let me give you something on news. So the other day, Micron came out, and they said Micron pricing was higher, right? So that means memory is higher. Then, TMC came out and said their revenue went up, Taiwan Semi, right? So if Micron pricing is higher, Taiwan Semi is making more chips. That means more computers are being made, right? Computers are using chips. That means SMCI is ready to go. That means the cloud is ready to go. So you buy SMCI, you buy the cloud, you buy Snow, and they both go up. So there's logic behind everything why you're doing it, right? And you had to know the logic. And the logic we do very, very well.
Okay, good. Couple more here, Sam, and we'll let you go. Does Sam use butterflies?
No, we don't use that, but we can. You can do however you want to do it. We do things fast, and those are hard to do. They take time. And when things move, you can't do them. Butterflies and all that stuff work, but what we would suggest, if you're going to do anything like that, roll into them. Buy one, then sell the other one later, or however you're going to do it, or sell the first one and then buy the next one later. So leg into it instead of setting it all up and trying to get it executed.
Okay, that makes sense. Last one, Sam. You ready?
Yep.
So I was going to ask you this too. What news sources do you use? Is there one favorite that you can tell us about, or are you just combing the
No,
whole thing?
I told you I got 1,500 people that either tweet me or middle of the night at 2 o'clock. This just came out, or this just came out, and I'm up all the time. And so when you have 1,500 people that have your Twitter that messaging you, it's a global. Right? I mean, people all over we have people everywhere, Russia, everywhere. They send me stuff at all times of hour, and we analyze it within seconds, and that helps.
Okay, cool. So that was awesome, Sam. I appreciate you coming on.
Okay, can you give me my screen back for one second?
Yeah, let's do it. Let me do that. There you go. See it?
Yep.
Go ahead.
Real quick, this is our services. We have 3 different layers.
Okay.
Premium morning call, so you get the morning call, you get the private chat, private Twitter. Chat room is very, very good. It's a little bit less. And then just the basic Twitter. A lot of people that are working stuff, just the Twitter. So we post to these things nonstop all day long. Lots of information. My public Twitter obviously is free. It's Smarter Trader. Smarter Trader. Be careful. There's over 200 fake Sams out there. so just know that. And obviously, we recommend a lot of people use Tradier and stuff. So obviously that works out very good for them. And that's what we got. So thank you.
Sam, thanks so much. That was great. Thanks for coming on. We always appreciate it. We'll talk soon. Okay. All right. We're moving along. Next up, we're going to turn to some 0DTE talk. So, gentleman by the name of Jonathan. Now, I'm going to really mess this name up. Zions. He's going to tell me how to pronounce it when he comes on. But we're going to talk a little bit about 0DTE, and he is from the Cboe. So let's bring John. Hi, John. How are you? Jonathan. Sorry.
Hey, Lex. Doing well. John's just fine. How are you?
Okay. And then pronounce your last name. I mean, I got one of those names too. It's really hard to say.
You were pretty close. You have a cooler last name nickname, though, than I do. It's Zayons.
Zayons. All right. And tell us a little bit about yourself and what you do at Cboe.
So I'm on our options business team here at Cboe. So, we really manage everything kind of day to day, making the exchange more strategic and profitable for our shareholders, really, at the end of the day. We care about our customer experiences, our client experiences, and the like. So whether it's talking about something like 0DTE, which is obviously a really hot topic, the Tesla or SPY options, whatever it is, we kind of have a focus on a lot of different things. There's never a shortage of things to do in the world of options.
Yeah, that's for sure. Okay, good. So we're gonna chat today, you and I, about some 0DTE stuff, right? And you're in New York, not in Chicago.
Yeah, I'm in New York.
Okay, terrific. So you want to jump right into it?
Let's do it.
Okay, good. Let's lay it up. 0DTE, right? What the heck is it? I'm gonna pretend like I don't know this stuff, so I'll let you explain it to the folks. So what is exactly the 0DTE?
Sure. Yeah. So just getting down to brass tacks, 0DTE, or 0 days to expiry, which is what it stands for, refers to an option trade that occurs on an option expiring that day at the end of the regular trading hours, which is 4 p.m. Eastern or 3 p.m. Central. It doesn't mean that those options were necessarily listed that day. In fact, typically they were listed weeks before and have been trading ever since listing. Just most of the trading is actually centered around the day of expiry itself. What we're seeing in SPX, our index options, is about 45% of total volume is 0DTE. And that's actually a very similar amount for the second largest 0DTE options product, which is the SPY ETF options.
Okay. So, we old traders, not you, we think of 0DT. We had those, right? Except they only came up once a month. And then all of a sudden they came up 3 times a week or whatever it was. And now the 0DT, we just have these listed every single day, and at least in SPX and SPY, I think you said, right? So
that's right.
So the ones that are going to expire on a day, they're already listed in next week, every day of the week in SPX. Is that accurate?
Exactly. Yeah. So SPX goes out 5 weeks.
Okay.
So you'll have a daily expiry out to the 5th week, and SPY goes out 2 weeks.
Okay. And you mentioned a statistic that I want to make sure we understand. What what kind of growth has there been in these zero DTs? I think you said 45% of total, but I want to make sure I got that right.
Yeah, so it's 45% of total SPX options volume. That's including the third Fridays, your standard AM expiries, not just the weeklies. So the whole pie, 45% of it is zero DTE. If you go back to the beginning of 2021, before we had the Tuesday, Thursdays listed, back then it was only the Monday, Wednesday, Fridays.
Yep.
For the weeklies, it was about 20% of volume back then. So the total pie has grown, and also the percentage of that pie that is zero DTE has grown as well.
Okay, and you guys have to be thrilled about that, right? I mean, this is quite the, you know, even if people want to argue with you about zero DT not being a great name for it, I think it's a clever name. I think it just sings when you see it, and it's the talk of the town. I got to be honest. So,
well, we're not sure exactly who coined the term. I guess it's kind of a depends who you ask kind of thing. But yeah, the name has really taken off for sure.
All right, did Henry name this?
He likes to think that he did.
All right, good. Now, who would you say are the largest users of zero DT options? You know, including, you know, the institutions. I would say that, you know, the market making community has to respond to them anyway, so they're not included in this. But who's trading these things in your opinion?
Absolutely. So just looking at our customer base, and yeah, like you said, the market makers would respond to pretty much whatever they wanted to do. There's a very wide variety of users using these, and there's different use cases, different reasons why people would want to use these. One of the largest groups, like you said, are institutional users. So whether that's asset managers, registered investment advisors, hedge funds, pension funds, etc. You know, they all have many different reasons as to why they'd want to use them. And of course, you know, we're Tradier Zero DTE talking right now. There's a big retail presence as well.
Okay, and then so a big retail. Do you have any hard numbers on retail percent wise? Do you know that off the top of your head?
Yeah, so we estimate retail to be about 30 to 35% of total SPX zero DTE volume.
Wow.
It's difficult to know exactly, given that, you know, a lot of smaller hedge funds or registered investment advisors would use services like Interactive Brokers, Tradier, TD Ameritrade, etc. But that based on data that pretty much we're the only ones that actually can see that level of granularity, we're pretty confident in that number.
Okay, interesting. And what sort of strategies are the retail traders using, would you say? Do you see a pattern at all, or not really?
Yeah, so, you know, there's obviously a few variations, but it's pretty consistent in terms of what we see people doing. We find that a lot of retail traders are taking like a nice systematic approach, like I'm going to come in every day and do this same thing. The most popular ones we see are actually selling call spreads and put spreads. So just your classic vertical spreads to harvest some premium. A call spread, you know, is selling an out of the money call and then buying a further out of the money call to really cap your downside risk. It's essentially receiving a credit, which you can consider to be an insurance premium for taking on a certain level of market risk, which is exactly the strike widths that you define by choosing the two strikes that you do. And a put spread is just the same thing using puts. So selling a put spread would be bullish. You're hoping that the market goes up or stays the same. Selling a call spread would be bearish. You're hoping that the market stays the same or goes down. The combination of those two, actually, which is a pretty popular strategy as well, is called an iron condor. You know, that's basically something you could do if you think the market is going to be relatively range bound that day. So you can collect premium on the upside and on the downside by selling the call and the put spread, but still cap your risk by having those long legs on the outside should the market crash up or down.
Yep. Okay. So what do you think the strong interest is among the retail folks in these zero DTEs, you know, over longer term maturities? You know, what's the catch? Why did this catch on like wildfire, I'd say, right? With these folks.
Yeah, for sure. I think a lot of it is that people like knowing the outcome of their trade quickly. You know, if you're doing this in the longer term, what you would consider to be a big market move may not actually move your options position that significantly, given the European style settlement of these things. It also really eliminates certain path dependencies that you could see. For example, if you were to do this on a monthly basis, the day you picked in the month would significantly impact your performance. Whereas if you did this systematically every day, let's say 10 a.m. Eastern, you would take out really that path dependency element to your returns. And really over time, let's say in the selling the call spread or put spread example we gave before, you'd really harvest that volatility risk premium in the very short term and taking out the volatility due to the path dependency of picking a specific day.
Okay. And you think the retail folks are using SPX 0DT over SPY? Is there a big difference between the two in terms of where you see the retail folks?
Yeah, so SPX and really index options in general have a few benefits over ETF options like SPY. The largest are the European style settlement. So given such a large strategy is selling these call and put spreads, European style settlement just means there's no ability for the owner of the option to exercise before expiry. So there's no really assignment risk before these options expire. So you're never going to wake up one morning and all of a sudden be short 100 shares of SPY.
Yep.
Which could happen if you're trading SPY 0 DTE or SPY whatever DTE. The other benefit is really cash settlement. So instead of the physical settlement nature of SPY, your positions are settled in cash. So let's say you're long the 4,000 call and the market closes at 4,005. You just get deposited into your account $5 times 100 multipliers, so $500 at the end of the day. There's no position for you to trade out of or manage. It's just all settled up nicely like that. The other benefit really that index options potentially could have over ETF and single stock options are potentially favorable tax treatment. We don't give tax advice or anything, but for a lot of qualified American investors, trading index options, people qualify for 60-40 long-term versus short-term capital gains tax, which over a lot of trades can really impact your P&L on an after-tax basis quite significantly. Definitely worth looking into.
Right. Okay. Good. Yeah. I think everything you mentioned there is super important. I think especially for the retail person, delivery can be a little bit, not so fun.
One more thing I think worth mentioning there is SPX is 10 times the size of SPY, so it is too large for some people. We do have a mini SPX product, ticker symbol XSP, which is the exact same size as SPY and offers the same benefits as SPX. So it's kind of the best of both worlds for that smaller retail trader.
Yeah. I was going to mention XSP, but you beat me to it because I've been trading a little XSP myself lately.
Great.
Yeah.
I have been too.
Very good. So why do look at I mean I hear positives to 0DT, I hear negatives. Why are there so many different opinions on this? And then I'm going to ask you, my follow-up question is going to be, people have said this could lead to another Volmageddon. Okay, and I want your thoughts on that as well. But what's the impact here at large, and why do we have such a diversity of opinions on 0DT? Do you think?
For sure. So yeah, just starting off with your first question, there's no doubt in terms of gross volume traded, 0DT options have grown at one of the fastest pace of any securities worldwide over the last year and a half or so, let's say.
Yep.
It's really easy for people to come in and claim that customers are only buying these options and market makers are only selling these options, which, as we mentioned before, is really the furthest thing from the truth. I'm sure you've seen a lot of the research reports that have come out from third parties, the bank desks, etc. But they'll typically proxy a buy or sell order by proximity to the mid-market. So let's say the market's $1 at $1.10 and I fill at $1.08. Chances are I was buying because I was closer to the ask. When you take spread trading, so any complex order into account, it's especially difficult to do that given that those are typically printed closer to mid-market for a variety of reasons. And they also proxy spread trades by execution time. So let's say I'm buying a call and then selling another call to put on a call spread. That'll just show up in the prints that they see typically as two separate trades. And they'll put that together, say, oh, this executed at a very similar time. It's probably a call spread. The fact is that due to many trading algorithms and just the sheer amount of volume and trades we're seeing in these things, it's very difficult to do. There could be dozens of trades that go up at the exact same time, and it's difficult to kind of piece those together in the correct way. So by layering on those many assumptions, which those research reports really did, and not having the actual data to back it up, it makes it almost impossible for them to know what's going on in aggregate. We as the exchange, we have access to the matching engine data, excuse me. So, we see customer buy call spreads. So we know the strategy coming in, we know they're buying the long leg, selling the short leg further out. So we can see how balanced this flow is. If we basically net out all customer volume at any point in time in the day, really, on your up days, your down days, mean reversion, momentum, really whatever it is, the customer volume is extremely balanced, and therefore the other end of that, the market maker volume, is extremely balanced. So I'd urge you. We put out a few pieces really talking about that. So anyone who's interested, I would definitely urge to look into that. But we view this as a very healthy product to trade, and since we have the most data, we definitely have done the most research into it, and I'd say the most accurate research.
Right.
Importantly, and I guess to the second part of your question about Volmageddon, which
what does that mean exactly, Jonathan? What does Volmageddon mean in your mind?
So Volmageddon is referring to 2018 when VIX went completely out of whack, and a lot of those short VIX ETPs really went bust. Some people who were short vol lost a lot of money. So typically when people talk about Volmageddon, that's what they're referring to. So there have been a lot of claims that 0DTE could lead to Volmageddon 2.0, which I really think is just a fancy headline grabber that people like to put in their articles. But I, along with many other people here at Cboe, have done really extensive research into whether or not we think 0DTE could cause any sort of market crash event or not. We strongly believe, due to that kind of balanced flow that I talked about before.
Sure.
During all types of trading days, we've looked at a lot of different examples, a lot of different times of the day, that there's virtually no risk that 0DTE could cause the market crash. It's super easy to look at gross volume and say, oh, 2 million 0DTE SPX contracts traded today, 4 million SPY 0DTE contracts traded today. Market makers must be so short gamma, which is what a lot of people like talking about. But that's not necessarily the case. A great example, which you can find details of in a report by Mandy Zhu, who recently joined our team a few months ago, called Much Ado About 0DTEs. It shows that high volumes do not necessarily equate to high risk. We took the example specifically of the August 15th trading day, but this would hold true for any trading day. That day specifically, the SPX fell about 50 points in a somewhat short period of time. It was about half an hour or so.
Yep.
It was claimed by various research reports that this day in particular had a sell-off due to 0DTE trading. Basically, the author's only claim was that, oh, there was a lot of 0DTE volume at this time specifically, and the market fell, therefore it must be due to 0DTE. They didn't really have any data to back that up. Naturally, given that we have a little bit more data than most people do, we took a little bit of a deeper dive into that. So we looked at total net market maker gamma exposure throughout that day at different points in time, specifically when the market sell-off is happening. Typically, market maker net gamma remains around $500 million within zero. Around 3 p.m. was the largest market maker net gamma exposure, which was they were net long about $2 billion in gamma, which sounds super high. 2 billion is a big number, but in the grand scheme of $500 billion or so in daily S&P 500 liquidity, that's next to nothing. Additionally, they were net long gamma at that point in time, and the market sold off. So since they were net long gamma, their hedging activities would dampen the sell-off, not further it.
Right.
Which is another thing that people don't necessarily grasp, and leads to a lot of misinformation out there. So we view it as a completely healthy product. There's many different customer types in there. A lot of people deriving values in different way, whether that's short-term portfolio insurance for some sort of Federal Reserve day, or selling premium in the short term. People get a lot of different things, and those things happen to kind of net each other out in a very nice way, leading to not much market risk, if any at all.
Yeah. You and I chatted about this the other day, but my feeling is that, and you may know this as a fact, but my feeling is that the market making community probably carves this 0DTE out as a little product, and they probably manage it separately from the rest of SPX. Any thoughts on that? You have, Jonathan?
Yeah, so some anecdotal feedback we've heard is that given that this has grown to such a large portion of volume, 45%, like we mentioned before, in one of the most heavily traded options products, it definitely merits some special attention, and that's exactly what a lot of the market makers have done. Is they've either added more people to focus specifically on 0DTE or set up their own 0DTE desks to really give this the focus that it deserves.
Okay, fair enough. Do you see this 0DTE craze continuing to grow? I mean, could this be some other goofy number moving forward? What do you think?
It's a great question. I wish I knew the answer for sure. The way I look at it right now is that if you look at total trading accounts in the US and internationally, such a small proportion of them actually use options. I don't know the exact number, but I've heard from some of our clients before that it's likely somewhere between 10 and 25%.
Mm-hmm.
As the democratization of options trading really continues and options education really continues, events like these, get out to the broader masses, more low, no-cost brokers are popping up. I really expect the number of options users to go up, and with it, of course, volumes. Additionally, I mentioned, kind of international expansion for U.S. brokers.
Mm-hmm.
That's already happened to a certain extent, and we've
Right.
heard that it's going to continue to happen, which will lead to new customers globally outside of the U.S. And similar to people here, they would derive value from trading options as well. So I would expect that to further push up volumes.
Mm-hmm.
I guess one more point to that is our global trading hours.
Yep.
We right now offer trading between 8:15 p.m. Eastern the day before and 5 p.m. Eastern day of,
Mm-hmm.
to really allow international users to trade during their daylight hours when they're
Sure.
awake, or for people domestically to manage their positions overnight. But it's just as the expanded access really grows, as the number of options account really grows, and as the education in options really grows, I would not be surprised if this continued.
Yeah. Is there any chance it bleeds into listed stocks, the Apples and Teslas of the world?
That's a very good question. One that we're obviously considering closely.
Yep.
I think some people want it, but they don't necessarily realize the risks that would come with that. We talked about the assignment risk before. Another kind of lesser known risk with single stock and ETF options is contra exercise risk.
Mm-hmm.
So basically that affords market makers who are long options the ability to exercise them after the close,
Mm-hmm.
up until I believe 5 or 5:30 p.m. Eastern. I don't remember the exact time, but after the close. So basically, as an example, let's say you're short a 400 SPY put.
Mm-hmm.
The market closes at 401, your option's out of the money, you go home for the weekend, you're all happy. All of a sudden at 4:15, some bad news comes out, whatever that may be.
Mm-hmm.
The futures trade down. The market makers expect that Monday morning SPY maybe will open at 395, somewhat of a drastic sell-off over the weekend.
Mm-hmm.
So they exercise their at the close out of the money options. And then Monday morning, you open your portfolio and you're all of a sudden short 100 shares of SPY at 400. And you're not necessarily happy with that. So that
Yep.
doesn't happen in index options. At the end of the close, at the end of RTH, 4 p.m., you're done. There's no
Yep.
risk for that. So kind of leading that back into single stock options, the fact that these kind of gaps exist will make it difficult for single stock options to have zero DT. Not that they won't.
Yep.
I'm not saying that. There are just
Mm-hmm.
some hurdles that we need to overcome to get there.
Okay, but it could happen. Just overcoming the hurdles is the first step, I suppose.
For sure.
Yeah. Okay. Interesting. I guess we have time for a couple more questions here. So, is there any different pricing mechanisms with the zero DTEs versus longer dated options? Are you seeing implied volatility be higher or lower naturally from zero DTEs versus the rest of the stack in expiries?
For sure. So I think the main difference really comes down to is the sensitivity to the underlying spot. Of course, given that these are expiring at the end of the day,
Mm-hmm.
they're super sensitive to really any movement in the underlying, especially if you're anywhere near the money. People like that, which is why they trade them. People are willing to take the other side of that, which is why they sell premium.
Mm-hmm.
So it's really just crucial for people to manage their books closer when they're trading zero DTE. But that is really one of the natures of this product that makes it so attractive to people, is those nuanced differences in terms of the elevation to price sensitivities of these.
Yeah. Okay. Let me show one here. I think this means, when are we getting VIX zero DTE?
All I'll say is that's something that we are seriously considering internally, and hopefully more to come over the next little while.
Yeah, and I think maybe you guys had some pricing mechanism around that. I thought I saw, I think it was Mandy on some webinar was talking about that.
Yeah, we have, willing and able market makers.
Okay.
We have the indexes already, and there's definitely interest. So it's something that we're closely looking into for sure.
Okay, good. Well, we're at time, Jonathan. I hope I didn't miss anything. You helped me out on this. I appreciate it. Really great info. It's really popular. I tell you, new person I talk to on the retail side, that's their first question, 0DTE question.
Awesome. That's great to hear. Happy to share everything. Thanks for having me, Lex, and looking forward to chatting soon.
All right, good. Thanks. We'll talk soon. Bye. All right. Well, that was really interesting. That 0DTE is quite the product. Next up, we're going to do another panel. It is the innovation panel, new tech in the trading space. So we have 4 gentlemen joining me. I don't know how Kayla's going to do this, but I think she's going to do them one at a time, maybe. Let's see what happens. Oh, we're going one at a time. Jason, you got the lucky draw. You get to be first. Let me get you off mute here. Hold on a second.
Thank you for having me on.
Yeah, how are you? Sorry, you're on mute there for a second. I didn't hear the first part. So, yeah, great to be on. Give us a quick little bio on yourself. Introduce yourself. Tell us who you are and who you're with and all that kind of good stuff.
Excellent. My name is Jason Randolph. I've been in the futures and the trading industry for about 17 years. I've worked at the Schwab's, Options Expresses, recently helped build Tradivate, and then worked with Ninja. And now I'm the VP of Partnerships for TrendSpider and General Manager of SignalStack, which is a platform that helps automate trading.
Okay, terrific. Okay, good. Next up, I recognize this guy. Hi, Dylan. How are you?
Hey, how are you, Lex? Pleasure. Can you hear me okay?
Yeah, we can hear you great.
Excellent. Thank you so much for having me.
You're welcome. So give us a little bio. Tell us about yourself.
Absolutely, yes. So Dylan Del Rosso here, co-founder of PeakBot. We have automated the option selling process for the retail trader. We've done so by connecting with brokers like Tradier and others to make it easy, affordable, and transparent for the everyday execute options trades.
Yeah.
So thank you again for having me. Excited to get into it. But PeakBot, automated options trading.
Perfect. Good deal. All right. Next up, we have Noah Jacobs. Hi, Noah. How are you?
Great. Thanks so much for having me, Lex. I'm too young to have as much experience as these guys, but I have ran a small fund myself. And then with some of those problems that I discovered there, I founded Ultimate Insights with a couple friends. And what we do with that is really bring in as much qualitative information as possible and systematically redistribute it to the user. It's really hard to stay up to date on everything that's going on. Maybe I'm paranoid, maybe we're all paranoid, but making sure that we don't miss any critical information that could actually move your equities.
Okay, perfect. Very good. And I think we have one more joining us. There he is. Hello, Steve.
Lex, how are you, sir?
Good. We've been seeing a lot of each other lately, haven't we?
I mean, do you ever get out from behind the camera? I mean, is this all you do?
It's my new gig, man. I don't know. How you doing?
So thanks for having me, Lex.
Yep.
Steve with Navigation Trading. I've been trading futures and options since, started trading late 99, early 2000, mostly stocks and futures. And then about 7 or 8 years later, really dug into options. I run Navigation Trading. We are an options trading education firm, primarily trading a lot of spreads in all different durations.
Okay. And you, Steve, you yourself, you use other platforms, right? As opposed to having, an automated type system. Is that right?
So I've just recently started getting some of my 0DTE strategies automated.
Oh, look at you. See?
Yeah.
All right.
See, that's why you brought me here, for the technology, right?
I know. Very good. All right, good. So innovation and new tech in the trading space. And it sounds like all of you are deep into this. I'll do the same thing I did on the first panel. I'll snake around a little bit. We'll see how that goes, and we can have some fun with this. All right. So all of you are involved in the technology space, right? Anything jumping out at you of late that people are clamoring for that you may not even offer yet? Is there anything out there? Jason, I'll start with you up in the top. So, what are you seeing and what people are asking for among the retail trading, population?
I think one of the biggest ones is there's both in the US and globally, just a push towards bots automation. With technologies like Signal Stack and some of our partners or other panelists here, it's really removed the requirements to do automated trading from it being a quant shop, or you had to be a Citadel, to just the average person. And I think there's a big emerging trend is just a demand for automation and bots, but it's become a very nascent space, a very noisy, and it really also has got some, it's attracted, the scammers in some of these elements, because it does not take much to resell or to create a bot. And it's a really interesting space, and I think it's an area that it's going to be the next big thing, but we'll see.
Okay. Dylan, how about for you?
Yeah.
Yep. Go ahead.
Yeah, I think Jason makes a lot of great points there. With automated trading, our whole lane is actually executing the trade on your behalf. And what the retail trader is kind of starving for right now is, as Jason mentioned, this space of automated or algorithmic trading. It hasn't gotten the best reputation in the past. There has been a lot of bad business, a lot of scams. So what people are really starving for, and something that we believe PeakBot does a great job of, is making it easy for the retail trader. Ease of use is everything. Making it affordable, which we believe there hasn't been too many platforms who've been able to do that successfully, and making it transparent. More important than easy and affordable, making it transparent. PeakBot's one of the only platforms who shares a full list of our traders' results. We're not putting their individual names out there, but we like to show you, hey, here's what they traded this week. Here's what they came back with. So automated trading, we're just riding this first wave for the retail trader right now, but making it easy, affordable, and transparent, that's what the everyday trader wants, because they're busy with life. 9 to 5, family, vacation, travel, traffic, you name it. Got to have something to be able to watch the market for you.
Got it. Love it. Yeah, I find that to be myself. You just define me. Can't sit in front of this computer for 6 hours a day.
We'll make sure you're getting ready on PeakBot then.
There you go. Noah, let's go to you. Any new innovations that you see interesting?
Yeah, I mean, like, taking a step back from the question, what is anybody looking for as a trader? You're looking to make money. So how do you get the trader as close as possible? How do you help the trader get as close as possible to getting that information that will help them make those decisions, especially when the big players like Citadel or Point72 have such easy access to that information? So really what I'm seeing is just this urge to level the playing field and get as close as possible to providing the actual signal. Obviously, when something's super noisy, maybe it's entertaining, but when you have a bunch of not super valuable information all at once, then it's easy to get caught into that whirlwind. How do you break that cycle? How do you really look through it and find the information that's actually going to move the needle? And that's what we're working on to help deliver to them. It's a process, obviously, but how do you see past the noise? Because we're finding a lot of people sick of being told, oh, this is the most important thing ever. It's how do you actually get down to the real stuff, the real stuff that moves the needle.
Okay, great. Thank you. Steve.
Yeah, I traditionally had kind of resisted auto trading bots and things like that. I mean, I always kind of thought of it as, I love to trade. Why would I want to automate the thing that I love? And I've kind of come full circle on that, because, and I think I probably look at it a little bit differently than a lot of at least new people getting into it, because I think the idea when people first hear bots or automation is, hey, I can just push a button and then go play golf, right? And the reality is, at least in my opinion, is you still need to be monitoring your trades, right? And so for me, the way that I have accepted it and have started to use it in my own practice is I like the automation from a standpoint of, now it takes away a lot of the fat finger mistakes that I may have made in entering or adjusting or doing these different parameters within the trade. And so for me, it's all about not set and forget, walk away. It's more about just minimizing mistakes. And that's where the big benefit is for me.
Yeah. Okay. Fair enough. So, we kind of touched on this segment here on some of the benefits. Steve, I'm going to let you keep speaking. We'll work our way around the other way. But my next part is, what about the risks? And maybe some of the bot guys will talk about that. What are are there any real risks that we're missing here with these new technologies, especially the automation piece?
Yeah, and this kind of dovetails on what I was talking about before. Is it just get in, push a button, you don't really have to learn anything, and just let it go to town. But the other piece of that is that I'm certainly encouraging our community is, you need to trade the strategy for a while first. You need to understand the strategy. You need to understand how it works and all the little nuances that go into it. And that can really only be done by actually trading it first, and then set up the automation. I think where people will get into trouble is they'll come in and just copy somebody else's bot and let it go. And then all of a sudden something happens out of the blue that's not normal, and they'll wonder what happened. And then they'll say bots are bad. That kind of thing. So I think it's a matter of really learning and understanding the strategy and then finding ways to automate that. I look at it as kind of, I trade a lot every single day. And so for me, sometimes I get to capacity. I have to cut out certain things that I don't want to trade anymore just to free up that mental capital. And what I've found automating and bots doing is helping free up that mental capital. I think it's to answer your question, I think it's just a matter of having the right intent of what you're doing with that automation and understanding the strategy underneath it, as opposed to just thinking it's 100% set and forget.
Yeah, good. Those are good points. Noah, what do you think? Any thoughts on the risks of this new technology? Especially
of course. Yeah, I mean, insert typical, this is not financial advice disclaimer, right? Yep. But really what Steve was saying is super true. You don't want to miss anything, and you can't really automate something if you don't actually understand it. I think that's where a lot of the mistakes come in. So I think Steve said that really well. And I would totally lean into that. The risk is assuming that the automation in itself is a solution. It's not a necessarily solution to the problem of trying to make money. It's more so helping you cut off some of the repetitive steps. It's never a be-all, end-all solution. You don't just start doing anything automated and print money. You have to be doing something right to begin with. And I think that's the critical thing here. Is this is not some one-size-fits-all. This is not some ultimate solution. It's more so a tool to help accelerate or save you time with what you're already doing. I think that's really the critical thing here, Lex.
Yep. Okay. Well said. Thank you, Noah. Dylan, what do you think?
Yeah, I got to say, both Steve and Noah, I have to echo what they said. Not being educated about what's happening with your bot is a risk, right? You got to know the strategy. You got to be educated, and you have to be comfortable with what you're asking this bot or algorithm to do for you. You also got to be comfortable with the stocks that you're trading. We get a lot of people who come in here who, we're selling premium, who are just what we call premium hunting. They're looking at the top of the watch list and they're trying to make their 5 or 6% in a week when, they really don't know anything about that stock or they don't have any emotional, fundamental, or technical tie to it. Right. You got to know what you're trading. And then the other risk is what people come in and they think that they're going to get rich quick because a bot's doing it for them. Managing expectations is really important. This is a long-term strategy, right? For most of us here on this panel, I would believe they would agree. We're not flipping a quick buck here. So the risks are, know what you're doing, be educated, and be comfortable with the stocks that you're trading. Otherwise, like most of us, even before algorithms or automated trade, you're going to get burned. We are playing the stock market here, right? So just be careful about what you're doing before you get into it.
Right. Well said. Thanks, Dylan. Jason, what do you think?
Yeah, I'll echo a lot of what Dylan was saying. I think one big area this is going to bring out is going to be a lot of the influencers. Everyone, I think in 2 years, is going to have their automated bots. And you're having this convergence of like a lot of these prop firms and then doing bots to pass the prop firm challenges. And even just trading bots. For a lot of traders, I had one yesterday that said, Jason, this is all complicated. I just want something that just makes money and I can leave it. And that is not what we're doing. This is a utility tool that does not create something new. It replicates an action you are already doing. Just like I think it was referenced like fat fingering. You're not being smarter with bots. You're actually removing the human element which out of trading. And when you decouple what trading is, it's setting up and finding opportunities. It's figuring out what would you do. Then the bot world kind of lets you not do anything more. Where right now the task that you would be doing is, okay, I get a ding on my phone. Oh, go out and buy. Well, I open my order ticket. I select what I want to do. It removes the human element, which is so often the number one reason for failure. Now, whether you're a good trader or bad, the human element of fear, risk, all those pieces can make traders, it doesn't make good traders, it helps good traders remove their human infallibilities. I do think this is going to bring out a huge amount of a market for, like, again, the bots, copy trading bots, all of these. But to a certain degree, I would even argue, how's that different than your 401k? All it is a bunch of bots running at Citadel and hedge funds that are literally doing exactly the same thing that's happening here. So it's really going to empower the traders, but just like any power, it's going to it's a tool that it's so easy to forget it and hope it's going to leave money, and it is risky. There's risk on people forgetting which side of the trade did they get in. They will go in and they make a trade or automate a trade, and then they forget to go and turn off the bot, and then they get burned. So I think there are a lot of risk because you are putting more power in both sophisticated and unsophisticated traders.
Okay, excellent, great answers, guys. I really appreciate those. Those are terrific, and I think. Look, I talk to a lot of retail folks during the course of a week, right? And education and understanding the risk reward sort of metric is vital. And Steve, I think you started it off in your statement about if you don't understand what the risk reward is and you're building bots, you're going to run into a problem sooner or later. I think that's powerful and well said by all you folks. That's terrific. All right, let's shift a little bit. The new, besides 0DTE, the new hot button acronym is AI. Okay, so AI versus automation versus algo trading, whatever you want to call it. What do you think the difference is? Is AI and automation the same thing? Is it different? And if so, how do you define the two? Who wants to tackle that first? First hand raiser. Anyone? Oh, look at Dylan. He's the Peakbot guy. He's ready to roll. All right, go ahead, Dylan.
Thanks, Lex. So the only reason I jumped on that is because I have this conversation what feels like 50 times a day. Any new customer who comes in and you ask them, "Oh, where'd you hear about Peakbot, or what were your interests here?" "Oh yeah, I wanted to get involved with all these AI bots." Peakbotters, I can't speak for anybody else on this panel. Our algorithms aren't AI. You nailed it, Lex. AI and automation have become synonymous in today's, world. And I don't think it could be, complete. They're not opposites, but they are not the same thing. I like to jokingly say our algorithm isn't going to get up and walk away on you, right? Like there's no machine learning with the execution of the trade. Our bots follow a set of predefined rules, almost essentially an if-then statement. If this happens, then this happens. We use AI constantly throughout our day in our business. I mean, ChatGPT prepped me for this call, but we are not using any AI in our algorithms. Now, in the next few years, that very well may change, right? We'll go with the tide, but algorithmic and automated trading, not equal to AI trading.
Okay. Anyone else want to take a stab at that? Go ahead, Noah.
Yeah, I mean, really echoing what Dylan said. What even is AI if you think about it? It's with automation or anything like that, you're taking a very discrete set of things, automation or an algorithm. You have an input, you have an output. That's automation. We're very obvious input output. With AI, I think you want to start leveraging that maybe when you're getting to less obvious things. where it's not necessarily here's this thing, here's the answer, where it's not a yes, no, it's more nuanced than that. It's something that maybe if we all were asked the same question, we would give a different answer. I think that's maybe with trading where you start to want actually using that, which is maybe in the ideation phase of coming up with a strategy, or our use case specifically is when we're pulling in qualitative information. That's an exceptional use of AI because it's not obvious. Like you can have an algorithm maybe to turn the words into numbers and process it that way. But at the scale of information we're processing, it does make sense to use AI there. But again, just like we were talking about before with the bots, it's not the solution. It's an accelerant to your existing process. If you're weightlifting and you start deadlifting with bad form and you keep going to the gym with bad form, you're just going to break your back. It's an accelerant. It's not the solution. And I really think with AI, with automation, that's a common thread here, is that these are not the solutions, they're tools. That's the common thread with all these things, even though they're different. And maybe low level quick answer for AI versus automation versus algorithm is automation algorithm being a little bit more discrete, a little bit more patterned, a little bit more obvious input output, with AI being something that even all five of us here would argue about the solution to, and trying to get a pretty quick and good answer for that. Never perfect, but how do we get quick and good?
Yep. Well said. Thank you. Steve, you had your hand raised too, and Jason, we'll go to you next.
Yeah, where I've started using AI currently is more, along the lines of Chat GPT, saying, Mr. Chat GPT, please give me all the FOMC dates in CSV file format going back to 2021. And it gives it, and then I can upload that into my back tester and run different strategies around that. Where I think AI could be exciting and kind of where I think it might go next is the ability for AI to help build a bot. So you kind of give whatever it is, Chat GPT or whatever version of that, kind of the criteria that you're looking for, and say, build me a bot, on this platform, if, assuming the platform kind of is able to integrate that. But I kind of see that's where it's going first. At least that's where I would like to see it go.
Okay, great. Jason, any thoughts on this one?
Yeah, and re-echoing what Noah said, it's a utility. Think of automation as a utility. It's not doing anything for you. It's doing what you already would manually do. It just does it repetitively. So where AI comes in, I would agree that the early applications in part are going to be one, just coding a strategy that already have inputs. Now, again, you still have to understand the basics, but I think the other one is a lot of the qualitative, because when you look at the essence, people think, oh, it's going to make a smarter trade. No, it won't, because that's called machine learning, or it's just called regression and like doing a back test. That is, and AI, you have, when you look at that, okay, I'm going to have a thesis, I'm going to put together some rules, and I'm going to back test it. Okay, where does AI fit in? It complements in certain parts, maybe the discovery of what do you want to trade? It's potentially can help with, okay, I give a command and it's going to code this or find an opportunity, but then on the very back end, it's not going to make it smarter unless you're doing a much more advanced quant background, which most people can't, unless you're at Citadel. And I would always say to people, it's a KISS approach. Keep it simple as you get into this space. It is dangerous if you don't know what you're doing. Make sure you know the bottom side risk and your exposure. One thing we offer at Signal Stack with the connecting 23 brokers is the ability to sim trade completely free. So it removes a lot of the risk. If you have a strategy and a thesis, put your strategy in, automate with Signal Stack completely free, and then watch it in a sim account. What do you have to lose? If after you do a 30-day pass to that and you see the performance, then let the machine start running on its own. But always run it in sim, And that allows you also to look at slippage and other extraneous variables that may come in, but let it run before you go and let it spend.
Okay, very well, very good, very good. Let me I think one of your team members, Dylan, might have answered this in the chat, but I'm gonna show this question. Anyone can answer this. So do you guys see that?
Yes.
Okay.
Yeah. So, one of my teammates is manning the chat here.
Yep.
So I'll just read exactly what he said because I think he nailed it. It depends on the strategy, right? Of course, you always want the best data available. If you're automating a low frequency strategy, data with a 15-minute delay won't matter as much.
Yeah.
So, and I want to allow these other gentlemen to expand on this, but quality of market data is always important. You don't want to go in blind at any time. So, we do our best to provide our users and our community with as much quality data, stuff that's very overwhelming for the individual trader to get through and enough time to go and make the trade while being emotional about it from time to time. We want to make sure that you're provided with as much information and quality information as possible.
Okay. Any other thoughts on that one, guys? The others?
I would echo, coming from a TrendSpider standpoint, the frequency component. Don't get stuck on this if you're not doing short time periods. And when I say short time periods, obviously that's a function of how much are you trading and how frequent. But I would say for traders, if you're doing 15-minute time frames, you're not worrying about intrasecond, or unless you're doing like futures and you got pretty high leverage and fast movement. Keep it simple in what you're focusing on and make it is phase one. Just replicate picking this up here, and I put my hand here. How can I replicate the most simple actions as a trader, and then tiptoe your way in, watch it in sim, and then validate.
Okay, great. Anything else, Steve and Noah? You guys have any addition? You good?
Yep.
Okay. So the next question is, and I asked this of the panel before. I don't know if you had a chance to hear that. These were real retail traders, right? And they're not necessarily experts either. I asked them, are there any tools that a retail trader really needs? And I'm not going to let you answer with a bot. So you already have that. I'm going to give you that one. So what is missing from the retail trading world in terms of technology or tools? I don't know. It could be anything. And the answer might be nothing. I understand that. But what do you think, if there is something, what is it that's missing from the retail trader's toolbox or arsenal that we haven't thought of yet and put into practice? Steve, I'll start with you. What the heck?
So, well, I'll start with saying one of the tools that I started using last year that's been a real game changer for me is the Option Omega backtesting tool.
Okay.
Yeah, there was always end of day data, backtesters and things like that. But when it comes to intraday 0 DTE, they do intra-minute data. So that was a huge game changer for me when I started using it towards the end of last year. What I think, and then, on the other side of that, I mentioned I've started doing some automation using bots in my trading. So I've got that. Where the biggest thing that I think would be amazing for my own personal trading, and I know a lot of folks in our community would agree with this, is bringing those together. So I can literally run a back test. There's my strategy that I want, flip the switch and start trading it. So just minimizing the different pieces and just bringing them all together into one platform.
Okay, terrific. Jason, you had your hand up pretty quickly. I'll go to you next.
The brokerage space is really pretty fragmented right now. And I think a lot of the entire space is so much of brokers have been commoditized. And it is so critical for brokers to now create differentiators. I think one of the big elements that will come in here is going to be a broker wallet. And this is going to be where you can go in, connect all your brokers in one interface, and then go and you can have essentially a universal order ticket where, okay, I can go and choose or split a trade between multiple areas and build that logic. And I think there's value there because people go to different brokers for different reasons, even during different times. And there's not a clean look. And I think of brands like Plaid or others where if I want to make a trade or automate it or any element, one login, my brokers are here. I've got already presets of which preferences do I want, even if I want to do certain types of trades towards certain brokers. But I think that will change. And I think that's where a lot of this is going, especially with the open APIs. I think, and that's one thing great about Tradier. I think you've done an amazing job of really building differentiation, adding value on top of we're cheaper, we have great customer service, and here, let's talk about order speed, which is really difficult to explain. But I think that's where a lot of this space is going, and that's where the big next technology is going to be.
Okay, thanks. Dylan and Noah, what do you guys, who wants to go?
I could give it a shot.
Okay.
So, if we can't answer with bots, then
not allowed.
I think the answer is, distilling a large amount of data into consumable bits, right? Allowing the trader to take what a bot can do, right? Go through all the data in a very short amount of time and be able to equip you to go make that trading decision. There's the answer to all this. There's somebody doing it, but the retail trader at large doesn't have this accessible to them, right? So I think that being able to take a lot of data and make that legible for maybe the novice retail trader to be able to consume and go and make a decision, or allow the bot to make the decision for them to step forward and actually make that trade. I think that's something that will become easier and easier for the retail trader as we go here.
Okay, great. Noah, any thoughts on this one?
Yeah, no, I mean, I love Dylan's answer because that's effectively what we're trying to do with Altabot, but I'm not going to use that as my answer. I think that my answer really is clarity of thought. I don't think necessarily there needs to be another tool. I think it means instead taking a breath, and Jason kept saying it, KISS, keep it simple, stupid. How do you simplify what you're doing and actually know what you want? We have AI products. What does AI actually mean? Everybody's seeing LLMs like GPT right now, and that's drawing attention to the space. But I mean, there's AI tools that have been used in trading for the last 10, 20, 30 years, if we're talking about random forests or even neural networks. So it's really like descoping your focus, having clarity of thought is the best tool, because just because there's a million things going on, just because there's a new cryptocurrency coming out or a new stock IPOing, you do not have to trade it. Just because there's a new tool, you do not have to use it. What is your core competency? And then what tools help you leverage that is more so the framework I would say is relevant here, because somebody's going to try to sell you something new every single day. And obviously, I'm a fan of what we're doing. I think it's a phenomenal tool, and it's in line with what Dylan's saying. But the single most important tool is I'm not going to sell that to somebody who doesn't need it. It's what is the single thing that you're focusing on, and then how do you start zooming out a little bit from there after you know what you're focused on. So I think the best tool for anyone here is clarity of thought. Don't try to do everything or you're going to fail at all of it. It's what is your focus? How do you leverage that? And what tools help you with your specific use case there?
Okay, good. Great answers. Do you think our industry needs any new tools that are focused on zero DTE, since that's the big, the big wave and talk? I know the bot world is great for that. Anything else that we're missing for zero DTE? I have an idea too, but I'll say it last.
We need Cboe to guarantee stops. Can you do that for us, Lex?
Tell me about that. Yeah. No good, huh?
No, it's fine. I haven't had any issues, but there will be situations where the slippage and or stops just don't happen, and that's gonna cause some issues for a lot of people.
Yep. Okay. Anything else, guys?
Yeah, I think risk awareness is what's needed around 0 DTE, right? Understanding that, this type of trade compared to a longer expiration, we do a lot of weekly contracts with PeakBot. 1 DTE, we run iron condors on the 1 DTE. Just knowing what you're getting yourself into, I think is what's important if you're going to trade 0 DTE. Know what you're getting into, know what risks you're setting yourself up for.
Okay.
And I would say anytime you compress time in automation, you increase risk, and you have to have higher attention because you've got more exposure. Looking at data as well is going to get more important as you start getting into these tighter time frames. But automation it's made for high speed initially. This is what King Griffin was doing 20 years ago with the options world, and the rest of the retail world is now just getting access to it. I think it's gonna be a true democratization of trading, because for those that can build smart, disciplined bots, it really opens up the market to a much broader ecosystem, not just in the US though, in the world. Because there's a lot of demand of an automation, especially in a lot of these emerging markets and Europe. They've been doing this for a lot longer, and they're doing it more on like products like Forex very often.
Yeah.
So I think it's built around this automation.
Sure. Okay. Noah, any thoughts on this one?
Yeah, I'm just going to kind of merge what Dylan and Steve said to say you have to know the risk, and stop losses are not a guarantee. So if you're out there shorting 0 DTE options, you have no recourse if it blows up, if the trade blows up and you lose 1,000 times your initial capital there. So definitely be conscious of that. And shorting is obviously much more risky than longing in this situation. I don't know what most people in this conference are doing who are watching, but seriously, be aware. If you are shorting an option and it blows up, that stop loss, that order, that limit order, whatever you have in there, there is no promise that gets filled. So just being very conscious of the risk involved with that, and being very, very aware of it, because as Jason said, when you compress that time scale, you have a different kind of risk here. So just definitely, again, not necessarily a tool, but just being conscious of the risk itself.
Great. Okay, good. One of the things that I've been looking at a bit is dealer behavior. What I mean by dealers is market maker behavior. You guys have mentioned Citadel, Susquehanna is another big one, but those people behave differently than the retail trader, right? So it's nice to have data on their positioning, and we can find that, right? It's out there. So it'd be nice to see that sort of level of data. And I know some firms that do this, and they work with Tradier, very closely. But gamma positions in dealer books in 0 DTE. And there's sub-Greeks that, Charm and Vana, which we're not going to get into, but those things affect how dealers react. And that can cause markets to move in certain directions if those metrics are big enough, right? So understanding that sort of thing is interesting, at least from my perspective. And if it were a little bit automated on top of it, it would even be better. So those are some of the things I like to look at. All right, what did I miss? Anything else that we want to cover real quick? We got about a minute, or make a plug. I don't know.
If you're gonna allow a plug, I'm here to plug.
Oh, you're a plugger, huh?
Well, you opened up the door. I'm just
all right. Make a plug. I'll let each of you make a plug. Go ahead.
I'll be quick. So, I think I said it earlier. And all these guys nailed it. In the next 2 to 5 years, everybody's going to have a stock trader in their pocket. Hands-free trading is here. It's not turning around.
Yep.
PeakBot's whole goal was to make that easy, affordable, and transparent to the everyday trader. We're not necessarily marketing to those who have the ability to stare at a stock chart all day, although this is great to just run in the background. We're going after the 99% of people who have that 9-to-5 job, who are busy with life, busy with work, busy with family, who need something to be there to monitor their positions and execute when an opportunity arises. So, that's our plug. Use peakbot.com, free trial, and schedule a demo. You'll end up talking to me and probably get my cell phone. I'm here to help.
All right, Dylan. Anyone else?
I would keep it simple. Remember, automation isn't innovation. Automation is replication. And if you're already doing something and it's working, then you can automate it. If you're not doing anything and you want to find something that's just going to make you money, you're in the wrong game. Because you're playing against the best. So keep it simple, figure out a thesis, set it up, run it for 30 days in simulation. You can do that completely free with Signal Stack, unlimited, and let it run. After 30 days, you'll have the number. You're not going to have fuzzy pieces. Like, you'll see slippage, you'll see all that. And after 30 days, you'll have the answer. It's that simple.
Great. Okay. Noah or Steve, who wants to go?
Steve, you can go first.
Yeah, I couldn't agree more with Jason. It's, I mean, that's obviously what we do is education. So get educated, understand the strategies, learn the strategies if you don't know them yet, and then bring it into the automation, because it's it just frees up mental capital.
Yeah. Perfect. Okay.
Yeah.
Go ahead, Noah. Close us down, Noah.
Close us down. Yeah. Okay. So, I mean, with Ultimo, I really firmly believe we're doing things that nobody else is. But again, it's not your solution. It's a tool if you already are figuring out what you're doing. It's getting you information that will fundamentally move the equities you're in. It's information about what's going on with your companies, and it's very comprehensive at that. It is not your end-all, be-all solution, but if you are seriously fundamentally interested in these companies, not technical analysis here so much, unless it's event-driven maybe, but if you're seriously fundamentally interested in what's going on with the companies, I can't think of a better way to stay up to date on them than by using Ultimate Insights here.
Perfect. Okay, guys, good. Awesome panel. You guys were terrific. Thank you so much for coming on. I really enjoyed it. We're a great conversation. I look forward to speaking with you guys in the near future on great partnerships. So awesome job, guys. Thank you very much for coming.
Thank you, Lex.
Thanks, Lex. Appreciate it. Nice to meet you all as well. Take care.
Cheers.
Take care, everybody.
Bye, guys. All right. Back to solo Lex. Good grief. The day's almost over. One more to go. It's our captain, CEO Dan Raju, coming on to give us a closing statement. There he is, Dan and Paul. I think Paul's in the background there. Let me get their mute off. Hold on a second, Dan. I can't hear you.
Can you hear me?
Now you're good. I see your mic was muted for some reason. Okay, go ahead, Dan. Sorry.
Lex, somebody asked you the question. Lex, when do you get off the camera?
I know. I saw that, right? There was a lot of panels right after each other. Then
follows him around.
I know. That's right.
I don't know if you follow the camera, the camera follows you.
That's right. I'm going to jump off while you give the closing remarks, though. So are you ready for this?
Yes, I am.
All right. Go have at it, and I'll jump back on at the end.
Hey, thanks, everyone. Thank you so much. Hey, by the way, before I do the closing, I know a lot of people to work with our support and service and operations teams. Paul was in my office before I do the closing, so I said, hey, Paul, why don't you say hi to the community? Paul, you want to say hi to the community? Paul runs brokerage operations at Tradier, so I want you to say
hello. Hope you enjoyed the summit. My name is Paul Lee. I'm the Chief Operations Officer for Tradier Brokerage. I handle all the customer support and back office, and I look forward to seeing you guys soon. Thank you.
Paul, thanks for taking the time. Hey, guys, by the way, I got to tell you, the innovation panel are some really smooth pluggers in there. Great job, by the way, by Signal Stack, PeakBot, Ultima Insights, and Navigation Trading. I think you guys did an amazing job. It was a great day. What was like the innovation panel was largely talking about automation, transparency, and ease of use. We couldn't get through the whole day for more than 10 minutes without talking about zero DTEs. So thanks for all the way from the survey to Jonathan from Cboe. I think we spent quite a bit of time on zero DTEs. But I think, right, what's another thing I really liked today was the trader panel. John, Gordon, Donna, Santiago, Jim, Linda, Dick, all of you guys. For the first time, we introduced traders on the show. So thanks for taking the time. I know it means a lot. I know it takes a lot of time and effort. But learned a lot from the call. I learned how important risk management is, discipline, right? How to be unemotional and learn from losses. So I think great. So I think to put all this together, Marcus, Rob, and also Sam did an amazing job. So on the whole, I thought I really enjoyed the show. I hope you enjoyed the show. We put a lot of effort, time from the Tradier marketing teams, Tim, Kayla, and all the product teams, Peter, Stefan, and the tech teams, Jason, and Max, and all the, and most importantly, Mr. Lex put a lot of time into it. I really thank you for making this success. And thanks for participating in the Tradier survey. We try to bring more of these kind of data-driven approaches to educate you and help you understand what's going on in the market better. So once again, thank you. Thanks for taking the time. I know it takes a lot of time for you to spend an entire day with us. I hope we made your time worth it. Thank you so much. I really appreciate you joining the Tradier Option Summit created in partnership with Cboe. Thank you so much.